Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio, the lovely Tracy Shuchart, our senior economist, and my boy Jimmy Cagnina, Cags, our senior market strategist. Good morning, everyone.
Good morning.
Good morning,
Naples.
chat
as well. Yeah. 69 degrees here today. I'm going to have to tell Pharm that. I think he has... He's always posting some levels with certain innuendos. We'll have to bring that up to him later today. And so, but yeah, overnight. So I got into some discussions even last night on Twitter. I've been long calls in the S&P. I covered them yesterday, towards the middle of the day, and I had already been scaling out of them anyway. But a couple things caught my eye yesterday that I think potentially changed the mood of this market coming into today. I mean, it goes without saying, the tariff talk, I definitely think that added to it, right? You also have people talking about the JP Morgan collar trade, which we'll get to Shai to talk about. We're getting closer to April 2nd. The 10-year did break out, 4.4 this morning. And I talked about that in my little box, that if it gets above there, I think that could be something to watch. You've got natural gas. That's just a headline. It's down 2.5%. Gold's up 1.3%. Coming into the end of the month, end of the quarter, everybody, I think it gets interesting. It gets a little dicey because similar to rollover, it's more about what people have to do than what people want to do. And I do think that coming into the quarter, end of the quarter now, today versus where we were yesterday, I think is a little bit of a different mindset, because when you look at what happened yesterday, we were holding above the 8 and 21 moving averages. That's part of the reason why I got out of it, my trade. And you felt like we were getting volatility down, volume was down. The market just felt like it could get back in grind mode. We all talked about it. And then ultimately, that's not the case. And then overnight you have this move, and we're going to get into the technicals. We got the gap below. And so there's just, all of a sudden now you've got this, well, take out the prior day low a little bit, no big deal. You now have volatility and everything back into this market, Shai. And so kind of talked about a lot of stuff there, but I want to go to you and really understand, is there any sort of macro news out there that is potentially driving us back down?
Well, I think that obviously the auto tariffs, and then overnight that sort of escalated. We saw the EU and Canada both threaten excessive tariffs in response. In other words, maybe indicating that we would enter a trade war, which would be very bad for markets. So that's kind of the big talk on all the headlines today on all the major newspapers. I think underlying, you talked about JPM collar. We have the JPM collar that they put on quarterly, which is kind of causing some negative gamma. And, potentially we could see an overshoot to the downside on that last recent low that we had at, what was it, 55.09-ish.
Yeah. So the negative gamma gets interesting. Jimmy, I go to you. Anything popping out with you this morning? Maybe some stuff coming from Mentor Q that, feeds into this conversation?
Yeah, no, I think you nailed it on the 10-year yields. That's on my radar screen is the biggest thing to look at. I think this market kind of anticipates what's about to happen a little better than the other ones. And the prices on the 10-year just broke this morning, continued to break this morning. The yields up on the week. I don't know how many basis points, about 43 basis points. So 4.3 basis points. So it's a big deal. And then when I kind of think about interest rates and what the FOMC is doing versus what the ECB is doing, especially with respect to the tariff stuff, there seems to be more of a hawkish tone on both sides of the pond, which should keep these interest rates elevated for longer.
Yeah, and we're also kind of seeing a steepening of the curve, which kind of is telling us that maybe there's some fear that this market is going to continue to the downside.
Yeah. It's amazing because, we've talked about this every morning. Pharm and I, we do tape talk. We talk about market environment. You know, we knew in the backdrop that this was still going to be the case. The market had gone through this volatility period where it was obviously, we had a lot of down moves and everything was, heading lower. And then we had some stability, and now we're back again, just like that. And I think it's a fresh reminder that even though from day to day we could see things come in and out of different market environments, there still is an underlying theme to the market right now.
Right. And we've been talking about every morning, this may be a decent low, but may not be the low. The low.
The low. I know it's a good low, but not a great low. It could be the low for now, but not the low.
Exactly.
Yeah, and Anthony,
so
just to
other
kind
than
of
that,
just to circle back. Sorry about that. Just to circle back to your point, it's a negative gamma situation for the equities right now, according to Mentor Q, and oddly enough, a positive gamma situation for Treasuries, but I'm not sure that's going to last.
Shai, you were going to say something?
Kind of the other news, just for traders that especially are trading copper, that came out this morning. Essentially, they're saying if these tariffs come in weeks instead of months, this could cause huge problems for those that are trading it, meaning, we're importing a lot of copper ahead of these tariffs. If tariffs happen before some of these ships get here, and they're taxed with a 25% tariff, because it can take 1 month to 2 months to ship over here. Then because of the razor-thin margins that copper is on, that this could potentially be kind of a negative price shock to copper prices, so watch out for that. That said, there are caveats to that. I think that would be the initial price reaction, but I think over the medium to longer term, it's still going to be bullish. So just something to keep in mind before we hear exactly when copper tariffs are coming along if you are trading copper.
Yeah, and good morning, everyone in the chat. Let's get our bullish or bearish poll out there if we could. And just let me know how you guys are feeling this morning. What are you guys thinking about this market? You hear us, we're talking about a few things. Again, we like to start the day with the macro backdrop because I do think it sets the tone. You have to understand it before you get into the technicals. And I think there's definitely some technical stuff that have changed from yesterday into today. So let us know how you're feeling in the chat. And of course, good morning. Thank you for joining us. Shai, for a real life story, a friend of mine, he's big with Carrier. In the Midwest, he talked to me about how much right now on a regular basis they're having meetings about how they handle tariffs. And it's a really big deal to them, and you think about how much that impacts everybody, from, air conditioners to all this different equipment, and he handles massive parts, and he's just like, already we're seeing, difficulty in managing their way through this, the uncertainty. And so that to me goes directly to the end consumer, because that's something that every person in this country touches, and that's why I brought that up. Everybody has a heating and air conditioning system in their house, right? And it's just, especially if you're down here in Florida or,
it's all, it's all the way down to, if like aluminum and steel tariffs have been in place for a while. We know, that even affects beverages, aluminum cans, things of that nature. But if we look back to 2018, when we first put tariffs on China for 25% on steel and aluminum, we did see consumer prices increase for about 3 months, and then that kind of tapered off. And so we may have an initial price shock in some of these items, but I would expect that to kind of taper off after a few months.
Jimmy, anything else besides bonds? Because overnight I see, when I look at the charts every morning, I see we got silver up almost 2%. Shai loves silver. You guys talk about that in hot commodities pretty much every day. It's been a market you guys have been covering. And I think more and more traders have been actually talking about this in the chat that they're going to start looking at markets like silver and gold, which I think is really good because they're trending
Do
really
it.
clean. Do it. Get in. Remember, there's micros for these products.
Yeah, absolutely.
And, gold's up almost 1.5%.
We did roll on gold. That's why it looks significantly higher.
Yeah.
Because the June contract was trading higher than May.
That's the one thing if you traders out there are looking at these other markets, equities roll quarterly. When you get into commodities, they're rolling monthly. You got physical delivery. It changes the dynamic a little bit with rollover. So make sure you're ahead on that. And we'll make sure that we stay ahead of this on this show.
Right, absolutely.
But Jimmy, what are you seeing overnight? Like anything else besides like gold, silver, and treasuries coming out at you?
Well, in copper, we have a really interesting technical setup on a daily chart, and I'll cover that in a couple of minutes when we do an edge report. We have a $5.20 kind of pivot line in my head. We have a gravestone doji from yesterday. So I'll talk a little bit more about that particular pattern I'm seeing in the copper market, which may make for some interesting short-term trading while we're waiting for all of this tariff stuff to resolve. You were mentioning silver before, and we're driving back up toward what I'm going to call a triple top, that $35 level, which is kind of a psychological level, which means, traders are going to drive for that, right? The market, it's going to act like a magnet a little bit. It looks like we're going to get to it today. We have a tremendous bid up in silver right now.
Getting to the chat, I love it too. You got good morning, Leo. Good morning. I think we got Merritt in there. And Leo says maybe trade gold on the next live stream.
Hey, do it. I love it.
That would be interesting to see. But gold it's open at that time, but it's out of RTH.
Correct.
Yeah.
But it still moves at that time for sure.
Yeah. So we got the poll out already today. I bet you today we added neutral to it too. I wouldn't be surprised if it's a third today, because I think that when I come into today, I look at the market and I look at the indexes and I go, if it wasn't near the end of the month, end of the quarter, I'd be more inclined to think that we would stabilize here and probably try to work our way back up. I get a little concerned about the end of the month, end of the quarter, because I think that the next day and a half-ish, probably later today, you start to see some volume pick up and you get into tomorrow. I think that it gets, I think you're going to have some volatility. I think it's going to be really good for day traders, but I don't necessarily know that this is like a one-directional type trade. I think it could be down and up and down. I think it could be very volatile. When I look at it from the bigger picture, I feel like the bulls have a good enough low to probably try and defend this gap. But I think ultimately, right now, end of the month, end of the quarter, a lot of volatility, especially towards the closes today. And tomorrow's close, I think, is going to be busy.
Well, yeah. And we also have, a lot of the ETFs have to rebalance at the end of the month. So we've seen kind of a significant decline in tech stocks compared to the rest of the index, which means they're going to have to rebalance their ETFs.
Yeah. I want to just, before we get to Jim and we look at some charts for the morning, natural gas down 2.5%. Any story behind that? Anything going on in the energy space?
So natural gas, well, one, warmer weather for sure, for certain, right? There's less demand. And in addition, we had a pipeline got struck by lightning to the Gulf Coast, and it's down right now, so that means flows aren't happening to the Gulf Coast, which means it's landlocked, which is obviously more bearish than that.
Interesting. Yeah, we've got a lot going on today. I think that today, tomorrow, really, really busy. I mean, we have Christian coming on today, which I'm really excited about, trading boxes. Let him strut his stuff today. And I was looking at his plan overnight on Twitter. Really solid. And of course, we've got Pharm and Tanya. And then Jimmy, before I hand it over to you now, you have a guest today for the midday stuff?
Oh, yeah. We have Nick for a tick, 11:15 East Coast time. We're going to do a deep dive into what drives this guy, where he's from, what's his outlook, and all that stuff. It'll be fun.
Yeah. Yeah, I look forward to that. I don't know a ton about Nick Furtick. I've watched him, on other shows. I've watched him on our show, and I really like him. I like his style, so I'll be interested in hearing more about him. But we will get to all of that later today. Jimmy, let's hand it off to you for this morning's Edge Report.
All right, so let's start with the 10-year note right now. I misspoke earlier. The 10-year yields, let's talk about the yields, are up 13 basis points on the week, currently trading around 4.427. The notes themselves have just broke through this, long-term, month-long area support around 110 and 18 halves, and we're just driving down here. And I think this is anticipatory. I think this is a little bit of a worry going forward with respect to interest rates, inflation, tariffs, and that whole macro story. But we're tapping now the 50 EMA. This is a pretty significant kind of move down for the 10-year notes. And again, I feel like this is going to continue throughout the week. Of course, our PCE number tomorrow could change that a little bit. But just going to the Menthor Q levels right here, there are some levels down here that are important. This 1-day min is at 110.05, and that's certainly a target. Now S2s, and we've talked about this with on the interest rate products. These daily pivots work really good as well. We have S2 forming a really nice area of support down there. It's at 0.6 half. And at the top, we have R1 kind of framing the conversation. That's the other pivot on the upside, providing some resistance up there at 110.21. The call resistance for 0DTE and gamma wall is up at 110.16. Again, I feel a little bit bearish here. I think this kind of sell-off could continue to the downside, but I've been wrong before. Let's take a look at copper, though, because it is it's a really interesting. Let me see if I could find it. On a day, we'll get to the gamma, but it's a really interesting formation up here. Now, remember, a doji candle is where the open and close price are the same. This isn't a perfect doji, but it's pretty representative of the idea, right? And it's at the top of an upswing, a pretty significant upswing. And we had a really big, the size of the wick on top of this candle is a really good tell. Sellers rejected this big time, brought us back down to reality. Right now, we're paused. Right now, we're paused. We have that lime green line right at 5.200, which represents a long-term double top. When I see these kind of doji formations at the top of a long trend on a daily, right away I'm thinking turnaround doji. I know the macro might not support that, and it might not be a turnaround doji, but this is what's on my radar screen. So I put that fib line there, 38.1%, which is right below that 8 EMA, and the 8 EMA is going to be important also. So those are kind of longer term targets if in fact we do get a retracement down on an intraday for Dr. Copper. We have that JAX 1 level down here, 5.2. Look at that. We tagged it. This is such an important level. It means everything is confirming 5.2, 5.2, 5.2. We tagged it. That's support right now. Pivot way up top. JAX 3 is also a gamma exposure level, which is very important. It's 5.27 right now. So those two levels are kind of framing the conversation right now. And we have almost a perfect volume profile on the session so far. It's not perfect, but it's pretty good. We have a point of control approximately 5.23. I expect some value area trading until we get some more news or some economic releases come out today as well. But right now we're kind of sideways here in the copper, kind of pausing, kind of resting a little bit. So let's just shoot over to, I know I'm kind of jumping around different markets. I'm trying to prioritize the ones that I think we should keep our eye on. And, we're going to see, let's just go to the, look at that. This is gold. June gold. June gold, I think Tracy said is the front month, right? So we're at 78,000 contracts traded so far. Nice rally in gold. We have that call resistance level at that even number, 3,100, as expected. We're still above that 3,000 level. Put support way down here, really, at 30.50, another even number, not surprising. 0 DTEs for call resistance in gamma wall at 30.55. So this is trending up pretty nicely here. No retracement in sight at this point. That Jax 1 level, though, we'll keep our eye on it, 30.75 in the event of a retracement. That's going to be, that's, again, the biggest gamma level, that Jax 1. 30.75 is on my radar screen. If you want to take a look at a daily, we could do that really quickly. I think we have time. Let's just shoot here and just see. And remember, because of the rollover and all that stuff, we see that little gap there. But we're moving the upside. There is nothing but blue sky up here on a daily. So I expect this to continue moving up. And I'm going to try to squeeze in one of my new favorites, which is, we're still in the March, folks. We're still trading the March micro Bitcoin. We'll take this as a daily first, and we see that trend again. That trend channel is kind of slowly inching up right now. We're over that 8 EMA. We're right at that 21 EMA, and so really, what would be awesome is if we could see this some sort of moving average cross up, where the fast, the 8 EMA crosses above the slow, the 21 EMA. That could be a good signal for the bulls for the micro Bitcoin. And then really quickly here, let's see where we at. There's really a tight range here. Put support 0 DTE is down. We tagged it really early this morning, and I'm gonna eyeball this at around 86,500. But small range today with a high point of control. Be ready for this thing to move today. Back to you guys in Naples.
Well, we're going to keep you here for just a moment, Jim, because we have a day really stacked full of data. Shai, what are we looking at for data coming out this morning?
Yeah, so we have initial jobless claims and continuing claims. Again, people are going to be looking to see if these recent Fed layoffs end up in the numbers. I'm a little bit skeptical only because a lot of these people got like an 8-month severance package. So I wouldn't really expect them to start claiming unemployment yet, but we'll find out if I'm right or wrong. Then we have GDP, which is GDP, obviously, and it will be annualized. So that's up. And then we have core PCE price index. This is what the Fed looked at. And this morning we have quarter over quarter, and then tomorrow we have month over month and then year over year. And I'm not certain why they split up the data that way, but they did. So this will be QQ for core PCE. Again, this is what the Fed looks at. And then personal consumption and wholesale and retail inventories.
Yep, and pending home sales at 10. I mean, what a day for data. I mean, markets are going to be busy today.
Absolutely.
I mean, there's just a lot going on. All right, Jimmy, thank you. Good edge report this morning. And, you know, there's a question came from Chad. Everybody, too, if you guys have questions for us in the morning or things that you think we should bring up, please put them in chat. And so Barshoni asked about Yemen USA issue. I didn't see anything about this on. I go to X for all my news. It's not like I'm digging deeper than that. But what do you anything going on with that?
So I mean, obviously, there's still a week ago we started strikes again on Yemen. That situation seems to have calmed down a little bit, but it's still an ongoing point of contention. Obviously, this affects shippers because the Houthis were attacking shippers in the Red Sea. That started back in 2024. That activity has died down a bit since the beginning of 2024. But again, still a point of contention, and same with other issues in the Middle East, including Israel and Gaza and Lebanon. So a lot going on over there. People ask all the time, why are we not seeing crude reacting to this? It's a case of it's kind of already been baked into the market, right? Because this has been ongoing for a couple years.
Jay's putting it into the chat. You talked about this briefly with the data, PCE broken up from today into tomorrow. I mean, explain the difference between today's impact versus tomorrow, and maybe if you understand why they did this.
So I honestly, I have no idea why they did it, but uh, but really, month over month is what the Fed is really going to be focused on, which is tomorrow's data. This is quarter over quarter, but again, of course, PCE is everything that doesn't include what you actually use, which is food, energy, and housing. But again, it is the Fed's preferred metric for gauging inflation.
Yeah, big numbers the next 2 days because of that. I mean, with the 10-year breaking out, and I know that not everybody watches this, but I do, and I think it's important because right now we're at this phase where I think that the markets are fragile. And
Yeah.
any sort of more negativity that comes into the market, right? I mean, we already got tariff talk, right?
Right.
I'm going to ask you more about the collar trade in a second, but you get data that comes out a little hot and you see the bond market sell off and, you see rates blip up a little bit. It doesn't make you feel warm and fuzzy if you're long going into the end of the first quarter. You're thinking to yourself, why didn't I sell that rally?
I think it's markets are back on their toes again and again. We talked about this earlier. It's the end of the month. We got a lot going on. We got a lot of rebalancing going on, not only for ETFs but hedge fund managers and things of that nature, because of the shifts that we have seen over the month in the index itself, as far as weighting on what sector.
Explain the collar trade and why that's impactful right now, and why that is. I see some of my top macro people that I follow talking about this as like the real thing you should be watching, or a main thing you should be watching.
So it's basically their hedging strategy, which they do quarterly. So they buy put options for downside protection, and they sell call options for capping the upside, while they're holding long S&P stock. In other words, so it's basically their hedging program, just so they can maintain neutrality in their portfolio. The problem is because they execute these trades in such a huge size, it does affect markets while they're putting them on.
Yeah. I mean, again, it goes back to, I talked about this at the beginning today. What changes from my perspective when you get into rollover, end of the month, end of the quarter, talking about collar trade, this is stuff that people have to do, not necessarily that they want to do, right? And so this is a dynamic. Look, I used to prey on this dynamic. My best days in my career have been the end of the month. I mean, it was funny. I used to walk in with, an hour and a half to go before the end of the day. I slept in that morning, went probably to East Bank with my buddy Vince. Then next thing you know, I had a Volare lunch, and I got a million stories about these lunches. They were pretty good. I'd walk in, and I remember seeing like Millie and Becky, they were at First Options, and I'd give them like the look. They'd be like, Deli's coming for the end of the month. They knew it was like my favorite time. Get set up at my computer with 30 minutes to go, and it really, for years, it was my best day of the month almost automatically. Because when you see something starting to unravel towards the end of the month, end of the quarter, there's typically a lot of momentum behind it. And again, people say, I look for stops. So when the stops are run, that's where, you could make some money because the market you feel is going to follow through. Or when you look at breakouts, end of the month, end of the quarter has that type of velocity to it. And you watch end of the month, tomorrow, end of the quarter, in that last 5 minutes of the day, probably last 10 minutes, because it's end of the quarter. It could even expand outside of that a little bit. You're going to get a one-dimensional move. And I'm going to talk a little bit about that with my charts this morning with Pharm, and something that I'll look at for that. But, it's not the easiest trade to figure out what they're going to do. But what I do like about it is that if I'm wrong, I'm out right away. Like if I'm going, it's almost becomes transparent in a way when it starts to happen. So if all of a sudden you start to see these big orders coming in, and this is something where I would actually like to pick Leo's brain about a little bit, and the Order Flow Labs guys about, I don't know if they can pull back data to ends of the months, ends of the quarters, but just also see like where these big orders are coming in maybe at once, and they're coming in and like striking hard and then pulling back. Because this is something that I go back to in the pit. There was timed orders. A lot of people, and that's why you look at the end of the, the first hour, the end of the first 30 minutes. I mean, there was times where I remember it's just like, some of the veteran guys would be like, at that time that their heads would just be looking right at the brokers, and all of a sudden they'd be like, they're selling or they're buying. And it's like, we would all turn and look at that. And that order would be like, I remember Tia and Halfman from Goldman. And it would just be like, if all of a sudden at the end of the hour, they'd be like 50.5. And they would be like, okay. Someone would be like, even bid. They'd like sell you 50.5. And you'd be like, oh boy. They're not selling 50. They're selling 500 or they're selling 1,000. And so all of a sudden, the best brokers, they peel their way into stuff. They do it in timely fashion. They don't just, they hit, and move. So stick and move. So it's going to be interesting to see what happens today into tomorrow. Watch for my commentary on chat about this. But Shai, thank you so much for shedding light on all this. And we've got
we just had data come in, and we have initial jobless claims came in on par. They were expecting 225. It came in at 224, so a little bit under. Continuing claims, the same. It was actually less than anticipated at 1856. So far, Fed people are not not jumping on the unemployment. Maybe I'm right. Core PCE index quarter over quarter came in at 2.6%. 2.7 was expected, basically in line. GDP annualized came in at 2.4%. Expected was 2.3%. And personal consumption was 4.0%, expected 4.2%. It is mostly in line.
It's funny because I was looking at it and I missed my timer there. I ran into that as you were going, and I was looking at the market. The market really didn't move on all that data coming out.
Yep. I think it's because it was pretty much in line.
So pretty much everything in line. I know initial reactions were pretty minimal. I mean, S&P is completely unchanged overnight. Right now, pretty much everything in the indexes is pretty flat. Very muted reaction. I'm going to see what 10-year did real quick before we get to Pharm. Yeah, it did nothing really.
Yep.
Yeah. All right, Shai. Thank you so much.
All right. Catch you guys at 11 for hot commodities.
That's right. Don't forget to miss that.
Right.
Today's going to be busy today. Going to be something to look at. All right. Now, Pharm Navy. We're calling them the Pharm Navy. We got Pharm Navy. We've got Tanya Army. And he's coming in with the blue today. You're supporting this Navy theme. I feel it. I feel like you're really embracing this Navy theme now.
Deli, next week I was gonna have you guess the color of my pants, but I'm not wearing any, so you'd be wrong every day.
Oh, I was waiting
camera
for
up
it.
here, buddy.
I know. Right away when I woke up this morning, and I get ready to leave, and I said it was 69 degrees. I'm like, oh, it's perfect temperature for a day to talk with Pharm. It's like your ideal temperature.
Beautiful. Absolutely.
So, we talked about this yesterday. We felt that, you and I were pretty aligned that we thought that the markets were taking a little bit of breather, kind of waiting for end of the month, end of the quarter, April 2nd, middle of the day. All of a sudden things changed a little bit again, right? You talked about this specifically where you were saying, let's watch the reactions towards the lows. That's going to make a huge difference. Like if we just made a new low from the prior day and we got back into range, it would be like, okay, this is now more of this new tape versus what we saw yesterday. We saw violence, right? Market shows a little bit more violence, right? And it was really kind of an endless. It felt like I was watching it just kind of melt down, and just thankful I was not fading it and wasn't long towards the end of the day, because I'm like, man, this thing is just not bouncing. Initial thoughts on what you saw yesterday?
Yeah, I mean, feel like maybe somebody needed out. Um, like the volume wasn't insane, right? Overall, I mean, the volume wasn't crazy, but like we definitely saw somebody needed out, and that's right. We talked about, you know, when you see an opening drive lower like that, it was just like February 18th, off or 19th, maybe off the top. It was all of a sudden after days of, just whatever, you get a drive lower at the open, drives through the overnight low, drives through the prior day low, and then it just keeps on going. Um, that's a little bit different, right? And so that was the change in character. And a lot of people weren't ready to like be short for the day, and I that's fine, right? And like you said, I mean, really after the first hour, once you break the range of that first hour, which is the IV low for us, break that to the downside and continue, like just hands off the buy button. Like the worst thing to do is to keep trying to buy the dip all the way down, because that's a different type of selling. And so if you miss the short, that's fine, right? Like a missed trade's not an account drawdown. But it, caught people by surprise. And, it could have been yesterday, it could have been today, it could have been tomorrow. Like we've all had in the back of our minds that like at some point, some selling could come back into the tape. And, that was yesterday. But again, like, I mean, it's not like it was crazy high volume. So like somehow surprisingly, especially for me, I'm not quite as bearish as maybe I should be. But there's some damage that has been done, and that'll need to be undone pretty quickly here.
Couple things. First off, I know the volume's light, and typically you see volume pick up substantially on a sell-off. That really didn't happen yesterday, and I'm not somebody who looks at volume too often and too closely, but I was looking at it at the end of the day. I'm like, man, this felt like it should have been a day where the volumes were, much higher than they were. And so I don't know how much of that I take into effect as to what I think could come of it, but it is kind of interesting that it's thinner, right? It's just quieter. It just feels like, okay, we're going down, but we're not having that same type of volume day. So that was something that stood out for me. The other thing is, and I talked about this morning, we all talk about assessing the day for what it is, what's the current market environment, and we've talked about this a lot, to where the market environments shift pretty quickly, right? You could go from what last year was this relentless kind of rally, and I think it taught so many bad habits that I think a lot of buy the dippers are getting really punished for this year, because they've not seen a market like this. And so last year was kind of an anomaly. Last 2 years, really, almost, where it's just like the bulls just got paid all the time. That story has changed, obviously. But when you get into the futures markets and look at what we've been in this year, right? We've had this sell-off, stay below short-term moving averages, consistently going lower, making lower lows, had a little bit of consolidation, started to stabilize back to the upside. And I know personally for myself, I was long coming into yesterday because I've been long calls, and I looked at it and I said, okay, I felt like this market is like, okay, we're back in kind of this short-term bull mode. And I think it was a harsh reminder to everybody that, look, this isn't over yet, right? That's the biggest thing I took from it, is like, we're a small little tweet, headline away from Trump, or other countries for all that matter. You got the JP Morgan collar trade, which is something that it's just a little bit in the back of my mind of what's going on, but it's not really, again, something that matters too much to me personally, but I know it's happening because I don't really know how. You can't really time that. It's just like, okay, it's happening. You got 10-year now starting to inch its way higher. It's going to be a busy year, and we might go back and forth into these different types of environments. And it might, like today could be a bull day again, right? And it could be like, okay, wow, did yesterday not happen? And then tomorrow's end of the month, end of the quarter, and it could be bang, it could be lower. And so I think we have to all step back. And my mindset every day is just be small and smart, be able to be nimble, but stay true to my process, have my process for entries, have my process for exits, and understand that there's a dynamic going on right now in this market, and that you might change from day to day, but overall this theme is still bearish. This market is not out of the woods yet, and you could tell how fragile the market is to the downside. It proved it again yesterday.
Yeah, I think that's right. This year, the budget line item for hedges, I think, is going to be a lot higher than last year. For swing accounts. I mean, I've already been, I feel like over managing hedges at times, at least on my swing account. But I mean, that's it. It's just sort of hedging out the rallies into the highs, monetizing some of that on dips, and just trying to stay somewhat neutral. And for me, seeing if I can navigate into a couple of positions that maybe I'll be able to hold out of this, if I'm sufficiently hedged. And then, yeah, just focusing on that intraday trading for me, because it's definitely been brutal to try to swing the index. I mean, the downtrend, once it really got going, was a little bit easier to try to hold some, I think. But like you said, I mean, we're one tweet away, or one bit of news from some other country that could just radically change the tape. So I'm definitely focused on the intraday trading, and then just maintaining some balance on a swing basis. So I was glad that I was probably even a little bit overhedged into yesterday on the swing account, so it did fine. And I mean, I didn't even take the short. My wife had asked me in the morning, she's like, "Oh, is it gonna be a slow day like yesterday?" And I was like, "Well, I mean, it's either going to be brutal and nothing's going to happen yesterday, or it's going to be a complete disaster and the market's going to tank." But I have no idea. She's like, "Oh, can you do some stuff for me?" I was like, "Yeah, sure." So I agreed to do, kind of be in and out. And, sure enough, I come back to the desk from unloading the car or something like that, and we break the IB low, and all hell breaks loose. And I'm like, well, that might've been fun. I think I caught a few handles of it, late, end of day. And that was about it. But definitely a wild market right now, very different from 2024. And we see this every couple of years, right? I mean, you had 2021 bulls were destroyed in 2022, and then 2022 bears that sort of stayed that way. They got destroyed, after about March of 2023. And now you've got 2024 bulls. I'm obviously overgeneralizing here, but if you're only one dimensional and not growing and not learning, it's probably been a tough year. So definitely have to be flexible and adaptable. Understand the environment is completely different from last year.
Yeah, no doubt. And although, a Trump presidency, if you didn't trade in the previous one, it's similar, but it's different. I mean, we're always a tweet or a post away from something erratic happening in the market. It's just what it is. I mean, again, we can't predict this stuff, so we just have to be small and smart, as I say. And it's funny, before we get to the charts, Merritt's saying, "Can we please get an actual chalkboard and betting ring going on your shirt color?" I think this is going to have to happen. This is something we have to figure out, team.
Do it.
It's
do it.
It's too.
I'm going to totally mess with you guys too.
Yeah,
I'll just come in not wearing a shirt.
He's going to come in with tie dye.
Nobody wants to see that. Trust me. Trust me. But yeah, I'll definitely do so.
All right, let's go to the charts for me
Deli.
first. Very simple. Yeah, that's the boomer bands. Let's go to boomer bands. So for me, it's really simple today, and as it should be, really every day for everybody, right? Coming in, you don't need to get super complicated what's happening on the bigger picture. And for me, nothing's changed. Nothing's changed from a daily perspective for me. When I look at it, my 5680 is still my key level. My 5930 is still my target. But what has changed is we're below the 8 and 21 now, and we're right on them. And why that matters to me is because I've said before, moving averages don't get me in trades, but they help me stay in trades. They help me trade the theme that I have behind the scenes. When I see that it's a confirmation, I see that we're holding above or below them, it helps me. I just identify overall trend. It's just that simple. And now that we're just sitting right at them, makes me pause a little bit. And I could expect probably a little push above, a little bit below, and ultimately an unclear picture, which is why for me as a swing trader, I am flat, because I want to see probably now a flush lower, which I'm going to have you talk about with the gap, because I want to see your charts for the gap, because that's something that we haven't discussed yet. If that gets filled, we go down, we hold 5680, I re-enter, and again, I look for longs. If we stabilize from here and we start to get daily closes back above the 8 and the 21, we get through end of the month, end of the quarter, I will start to establish a position back towards the 5930 area. That's where I think they go. I also want to go through real quick when I look at all the indexes, they're all the same again. So when you look at S&P, Dow, NASDAQ, Russell, they're all similar. Again, nothing's changed for me from the perspective of I'm still slightly bullish because of the daily chart and all the indexes are working together. But we are now getting these crosswinds from all the things we talked about. Tariff talk, April 2nd's coming up, JP Morgan collar trade. You're seeing 10-year breaking out just a little bit. Metals continue to push higher. You're seeing inflation, story with copper and some other things, and you feel like that's a push and pull in the tape. And of course, a lot of that stuff is really kind of baked into where the indexes are anyway. But when we get crowded around moving averages, it doesn't give me that clear view to execute. So I think for intraday traders today, it's two-way tape. I mean, I think you have to come in today with the openness of this thing could rally 50 plus, it could break 50 plus. I really do feel that way today. And I don't think it changes much from my perspective on bull or bear. I just think that we could have some real volatility. The last thing I want to show before I get to your charts, Pharm, this is what I'm talking about with the 10-year. This is the 10-year micro, and this is just the yield, right? And so this morning, actually, it broke out to the upside. It's actually coming back in line a little bit right now. Why this matters to me is because we have been in a range for rates for the whole year. I mean, if you go back the whole year right now in rates, this is pretty much the majority of the year is right there, right? And so now we're getting back up into here where we came from earlier in the year when rates were up in this area. And it does make me get a little interested to see how that does impact equities. I don't think the Fed is in a hurry to raise rates. I don't think it's any of that. I just, again, in a fragile market, if rates are going up and I'm long a bunch of equities, it doesn't make me feel warm and fuzzy. And I think for the bigger picture players, it's something they keep an eye on. So I'm keeping an eye on it. That's what I've got for today, Pharm. Let's take a look at what you've got.
Yeah, I think that's a good read. I'm just going to start here on the daily real quick. I mean, the only level I had on here yesterday was, basically the prior week's high, which you can also see was, the first of the week March low. And we have sucked back into last week's range, and that's basically where the overnight high is sitting as well. We do still have this open gap. And I mean, if you can see my cursor, if you just kind of stick a horizontal here, right? You can see that we have held as of the overnight low, basically, the meat of this range. And so we're really in a tricky spot here where, you could have sellers defending, basically the top of last week's range, and you could have buyers defending either this gap, maybe we get a gap fill reversal, maybe it just holds the overnight low, and I'll drill in on that in a minute. It could definitely be tricky here. We talked last week, I'll flip to the 30. We talked last week was all about 57.26 to 57.33 half. And that's where the overnight low sits. And to me, that is just a huge, huge high time frame spot. We were talking 58.11 to 13, up to 48 for this week. And so to me, the rotations, big picture, starting top down with 59s. It's like 59.17 to 59.30 comes down to roughly 58.11 to 13. I've been tweaking that range as we've now traded it a bit, but I think I used 20 to 34 for this week. From there, it's 57.24 really to 33 half. I used 26 to 33 half into this week. And below there is a little bit trickier, but problematic. You can come down to 5665 to 5675. That's basically your September FOMC low. And so, it gets very tricky. And so for me, here's the weekly profile as it's developing. And overnight, we've put in more volume, but as of yesterday, this was the weekly profile. We didn't have this overnight volume. And so the meat of this week's distribution is up here, basically let's call it above the 90s. And so one of two things is going to happen for, this next couple of days. We could just balance in here and fill out volume, and we would have a double distribution week and make a decision next week. Or we could certainly make the move today or tomorrow, lose this 26 to 33 and a half, come down and fill this gap. And there's a few spots that I'm watching in terms of like, what is the gap, right? Actually, Leo's going to be all over me about this. So I do look at gaps different ways. You've got it, an RTH gap. So, I'd be looking at Friday's high first. So that's like the proper gap. And then I'm also looking at an ETH gap. So the 5 p.m. close. We also, we closed at 5 p.m. Then we, gap to the heavens, right, on Sunday night. And then I'm also looking at the Friday, close. And so it's just, I do all of that just to keep me a little bit cautious for taking a breakdown short, for example, below this overnight low, below 26 to 33 and a half. I'm not looking to have it stuffed in my face on some kind of gap fill reversal. So those are some of the things that I'm watching for. We could just balance the rest of this week and here, or today we have. So we were looking for a short at 72 and a half this morning. I think the overnight high is 72 and 3/4. So, into the day, if we just see some continuation in this range, then you're going to see two-way trading, and it could be a little bit awkward. If we pop up here, I'm a little bit cautious, call it 85, and I'll get on my 5-minute. I'm calling it 85 half to 91 maybe. Could be tricky. So, sustaining above the overnight high is generally a bullish thing, but I'm very, very cautious up here into 85 half to call it 90. So, for now, the overnight session, just sort of filling in that volume right here. I would kind of like to see that start the cash session that way. And again, just kind of build some volume here before making a decision, because this is such a huge spot. Like I didn't long it directly, and I wouldn't probably long it directly on some huge gap down, but it is a massive spot. And we do have the possibility of just leaving that gap open, and that would be, quite a failure on the part of sellers. So to me, two-way trading in here, below 26 to 33 and a half, outright favoring shorts. I'm still favoring shorts up here. I'm still favoring shorts up here. If bulls get this back above, let's just call it 5,800 to be safe, right? But like the range we traded Monday, Tuesday, then this was just a big giant LOL, and we're probably going much higher. So that's how I'm seeing things. I think the easier trade is probably going to be, in terms of like maybe a swing trade, I think it's probably going to be next week. I guess it could be tomorrow. But that's sort of why I greedily or selfishly would like to see some volume fill in, even up to like this 87 or something like that. But at least, let's call it 72 half down into yesterday's low. And that's all we're doing right now. We came out, we gap below the overnight, or gap below yesterday's low, overnight session, held the major high time frame spot, and now we're just sort of chopping around in between yesterday's range and yesterday's low, and then that 72 half. So two-way trading to start the day, and we'll see which way this breaks.
Yeah, I completely agree. And it's very similar in what I'm saying is a two-way tape for now. They've got to work through this. And, for intraday short-term traders, for scalpers focusing on really short-term scalps, I think you're going to get a real busy day. I think you're going to have enough movement to where, you could trade this on both sides. I don't lean towards any one side. Do you really lean towards any one side in this area, or is it just if we stay and fill that area out, it's just really, trade the edges type scenario?
Yeah, no, that's it for me today, is trade the edges. The thing is, I am not looking to be short into this 57.26 to 33 half spot at all. I'm not looking to be short into a high time frame spot, but then above me, we have some technical damage that is more recent. So to me, it's about balancing, the recent price action, the recent profile. Which side do I want to trade on? Probably the short side, but nowhere near here. So like, I'm not taking a breakdown short below yesterday's low necessarily. If you want to like try to scalp it or something, I think that's totally fine. It's just not my style. But I would feel safer if we are making clear lower highs and lower lows below 57.26. Then I'm outright short without question. And yeah, I think two-way rotational trading, and I'm okay trading this either way. Either longs from the lows. I don't love it now that we've come down and we sort of tagged in Europe yesterday's low like kind of perfectly. At this point, I'd like to see a little bit more fear if I'm going to get long, but I'm absolutely open to two-way trading in here, and then watching for maybe a quick run of the overnight high and definitely short that sort of back down. But it's, to me, very much potential for two-way rotational trading, really between, call it 57.30s and 57.90s, could be your range for the rest of the week, if we decide not to break one direction or the other. So I'm open to both ways, but I would prefer shorts towards the highs.
Yeah, I think of Merritt when I think of trading the edges. I know he's out there right now, and he says his edges within the edges. He knows I love that line. It's great. And I think that a day like today, the middle is where a lot of people are going to get really torn up. And so I think that sticks to my mind, and other traders to think about that as well. And also, PAX's opening range, going to be interesting today to see how we trade around an opening range, because could it be opening range low and we just run higher? Could it be an opening range high and we run lower? I could see like the PAX group having an interesting take on what happens today and what they're looking at, because sometimes you get down to, if we just open and just go in that direction, it could be the case. So if we open up towards the middle, that's the only way I would look at a trade, is like if the opening range is the high or low of the day and we start heading in one direction, and it's a good way to manage risk. But patience, man. I mean, it's what it is. That's why we step in every morning. We paint the macro environment. We see what's going on. We get into the charts. We get more granular with it. And, we only could see what's in front of us right now. And it's like we need some time here to play out. I'm curious, I talked about the divergence in the other markets just kind of disappearing, and I look at divergence just as markets working together. Is there anything that maybe you've been peeking your head at with NASI or anything else that those other traders maybe could take a look at?
Yeah, one thing, because you're exactly right. They have been trading a lot more in alignment. And this was a little trick that we were monitoring for into yesterday. And that was looking at RTY. Let's see if I can get RTY pulled up here. So as this week was developing, it was effectively a P-shaped profile, which if you're a profile trader, you know what that is. This volume wasn't here. We had the stick from the overnight, and then it just looks like a P, right? And so I was watching for RTY, and basically all the indices were somewhat like that. And so we were watching for RTY to be the first to give us that breakdown of its P as a clue that the others might follow, because they have been aligned. And of course, I'm looking for RTY to do it first because it's a POS and it's going to zero. And it's sure enough, it broke down. This little trap higher, oh my goodness, what a juicy short. Like if you're a volume profile trader, you're looking up at that high and you're like, wow, give me back. I didn't see it. But yeah, so it broke down first. And that's exactly what happened. And then honestly, all the way down, I was saying, look and see what RTY did when it got to, the overnight low from Sunday. How did that respond? And that may give you some clues into how NAS will and ES. So even if you're not trading RTY, which, I mean, if you are, you should definitely be short because it's going to zero. You can use it for clues and things of that nature to give you a little bit of guidance in your, ES or NQ trades. You'll see that kind of stuff a lot when they have like nearly identical profile characteristics. Your relative weak one might display sort of or play out the expected trade that you're looking for before some of the others. So definitely keep an eye on all of them.
Yeah, that's why I asked you that, because when it gets really choppy like this, you might have a stronger market. If you trade all the indexes that you would want to lean towards the long side on, or it's giving a clue towards the other indexes, or one that's weaker, and that's the one you would want to be shorting. Like I'm a big fan of shorting the weaker, buying the stronger. I know a lot of traders will fade them when you see like a tape that's very, much like we have right now, where maybe you have a NASDAQ weak this morning and the S&P strong. I'm just saying hypothetically, you try to buy the NASDAQ to catch up with the S&P, and the NASDAQ just stays weak all morning, and then the S&P is the one that's stronger, right? And I always believe in buying the stronger one or selling the weaker one. And so right now, I think keeping the indexes up and the 10-year is key for me, just understanding what's happening within this tape. So yeah, but thank you again so much, Pharm. And Pharm Navy out there, give them the thumbs up, hit that like button. Pharm is on with me Monday through Thursday. This is our Friday, Pharm, you and I, as we wrap up our week. And following us today is also, we got Tanya coming up. So Tanya Army's got to get ready for that. And then we got my boy Christian. And then tomorrow morning taking our place is Pax. Everyone's got to tune in for that. Pax is going to be on with Cagnina for Capital Preservation Fridays. He's not in the studio now. He's back in Chicago. He'll be on with Pax. And then, of course, we got Sarah Strat Sniper tomorrow for our live trading. And let's not forget Nick for a tick later this afternoon with Cagnina and hot commodities. A lot going on at the NinjaTrader Network. Pharm, it's always a blast to talk with you. I enjoy these conversations every morning. Have a great trading day, and I will see you next week, my brother.
We'll see you Monday, Deli. You take care.
Tanya Army, hit the like button. Let's go. Let's get our girl in here. Tanya trades. Good morning, Tanya.
Good morning. Good morning. How are you?
Good. Hat tip to you yesterday, coming in neutral. Your plan, I remember vividly. It was really pretty spot on, what you were looking at, and excited to see what you have to say today.
I know. I honestly, like, the last 3 days have been pretty good with my analysis. I'm pretty shocked. But I didn't expect that much of a drop, honestly. I thought, we'd go for previous day low and, kind of hang out in this area, but no, what a drop yesterday. It just kept going, right? And we completely repriced to that gap up from Monday, right? Like that Sunday open gap and go that we had. And we're back in that zone now. So I think this is definitely an area where the bears and the bulls are fighting for sure. It's definitely an area of like territory for sure. Like I think the bulls have to defend this to keep the upside open, right? So you guys were talking about, you think it's like more two-way tape. I think that's possible. I have highlighted this daily gap on my charts here on the daily zone, and then like I'm gonna go down to the 4-hour and see what's up. I think honestly we should, if we're gonna be any good, we need to hold up 50% of this, and NQ has pretty much repriced to there during Asia session. And let's see, ES, I don't think we repriced to there yet. Oh yeah, we did around there. So I would love for Asia session to be the low, really. I don't really want us to break that. I think that's the important area. And we're creeping lower there, but maybe there could be a divergence in the fact that one asset, like I said yesterday, right, when we talked about, this could be like the first clue that we're going lower, that ES didn't take that high and NQ did during Asia. We took out yesterday's high. Maybe we'll set in another divergence here where maybe NQ takes out this Asia low and ES doesn't, and then we sweep it, wick it, go back up, see a reversal. I would like to play longs. I'd be more inclined to want to play longs here than shorts, but I'm open to either one. If we break this Asia low with displacement and the indices are in sync, both heading lower, then there's more pain potential here, like, but down to, I think basically for NASDAQ, a key area is this 20,000, right? It's a huge area. I think the key psychological level, plus it's in the midpoint of this gap I have. And if we break and hold below that, we could head lower down to this 4-hour swing low at 19,800s and even 19,620s. But that being said, I'd rather us hold it and come up and like we could have a 50% retracement through this large gap that we have yesterday. Now this like large swing lower. Yesterday, honestly, I thought we'd go lower, but not that much, and I kind of the drop lower didn't really give me the retracement I wanted, so I didn't really even have a trade yesterday. And that's fine. Monday and Tuesday were good for me. But today, let's see here. Today, yeah, if we're going on a long side, I'd want to see Asia low to hold, or either Asia low holds on both, or one of them, ES or NQ, takes out their Asia low and the other one doesn't. Then I'd see like, okay, that might be a clue, market showing its hand that we might start reversing. And then I would look on the 15 or the 5 for market structure shift. So I'd look for a swing high to get broken. Well, most likely I'd like the 15-minute, a swing high to get broken. So like you see so far, you guys, we didn't really break anything on the 15. These since Asia, right? This high failed to take out this high with a displacement. This high failed, making lower highs here, but higher lows. So it's kind of consolidating, which is a good thing. But let's say now we take out this low, we sweep it on NQ, then we have a nice displacement back over a 15-minute high. Yeah, I'd look for longs back up to 50% of this leg lower, because yeah, yesterday was such a fast unraveling. We didn't really have many retracements, and now we could retrace back to mean reversion, like you guys like to say. Let's see on the 15-minute if there's any gaps there I could like potentially. Yeah, like this is a huge just above 50% for ES. There is a gap above this candle, between that candle and this candle. I could go for that. I'd probably just go for 50%, honestly. Let me see, let me mark that out, like right here from this candle high, this candle low to this candle high. Yeah, for longs, I would probably target that. And I'd want to note again, yeah, which index is stronger. For me, in those situations where, like I said, if there's a divergence where one index takes the low and the other does not, then I'm going to take the one that made the higher low. Or yeah, and that's basically along the stronger one, and that's basically how I decide which one I'd go for. Or if they both keep their Asia low intact, I'll just see which one is more energetic, taking out their highs more energetically with larger fair value gaps to the upside, FEGs, which are those like spaces between those candles. So yeah, I mean, so far, you know, I'm just marking out some 15-minute swing highs and not much yet. You know, we had 8:30 news and it's pretty much been muted since then. Like that hasn't moved the market much. So it could, I think, you know, we're just waiting until the open to see what's up. Though keeping in mind, like, what was it? Tuesday has been the high of the week so far on the NASDAQ. So, and right now we're on the weekly, we're actually near the open. Yeah. We're basically right where that opening is. Let me just move this aside. Yeah. What a interesting wick there on the weekly. Like it's not looking that great for the bulls there. So like I said, if we continue to fall lower, we totally can, and we can even go for last week's low, 19,600s. Because look at this, like, yeah, we came up to this volume imbalance and fair value gap, and we completely wicked it. It looks like pretty bad on the weekly, I'm not gonna lie, you guys. So if the bulls can't really hold up there, then yeah, I wouldn't be opposed to lower at all. Like I'm ready for both sides. Yeah, because that could, like, all in all, we're around the weekly open, and if you're, you know, if it's going to be a down close candle, then there's still more downside to come, and it could be like Tuesday high of the week, turn around Tuesday, like well, actually it was Wednesday high of the week, which is totally fine too. Yeah, Tuesday or Wednesday high of the week, and then you could have Thursday, Friday lower. So those are my two thoughts. Is like we could either have a retracement back up to 50%, or you know, head lower today. I wouldn't be opposed to either. And it's all about, for me, about this Asia low which aligns with 50% of that gap up on Sunday. Are we going to hold it? And are we going to have displacements back to the upside to start this move back higher? Or are we going to, continue to follow bearish order flow and continue the unraveling? We'll see. And yeah, got to be nimble both ways. I think now we could start having larger ranges. Yeah. Thursday's typically a larger range than usual. So yeah, I think that's
How much of importance? I'm just curious, how much of importance for you? And first of all, I totally see your plan. I completely understand it and what you're looking for, and I agree with a lot of it, because part of it is like, if we were to go lower, take out the low, and they get back above that in that range and take out one of those highs, then I think that's what triggers a rally. If it grinds up in there, it's a lot more difficult because it doesn't have the velocity. But how much of importance to you is like yesterday's low getting taken out, and the weekly getting into that gap? I mean, how much are you looking at those and saying, if we get into that gap, because if we wick lower, you're buying now into a gap, right? And so are you waiting for it to, like, what's the thought process? Because once we get into a gap, I always find it hard, because you just never know if they're going to, a lot of times they'll just whip around and then eventually fill it after they get everybody out. And so I'm just curious what your thoughts are into that.
Right. For this gap, like I honestly am not really going to get too involved in it unless we displace lower and we could really stay in the lower half to go lower. Like, if I'll definitely have the half marked out. It really depends on how we react to these lows. I'm not going to be I'm not typically not going to buy in the gap, because like you said, it could just consolidate. I'd rather see us take out a low within this gap and then take out the high. And I'd be much more comfortable longing up here after you break a high and then retrace, rather than just buying in the gap, because I won't really do that. I don't like buying just straight against a level. I'd rather wait and see the reaction to it, and then trade that reaction and buy the pullback after that. Like, even like yesterday, when I called out, like, oh, okay, this NASDAQ took out yesterday's high and the ES did not. So then it could potentially be a sign of lower action. I'd rather wait and see more structure following that course of action showing the reversal before just buying it. So like, yeah, I don't buy the first like step of the reversal. I'll wait for confirmation on the second or the third step. Yeah.
Yeah. And for me, as more of a swing trader too, I like to see them try to get into a gap, either fill it or come just shy of filling it and then get above that recent high. Then, because to me, that's the easier way to manage the trade, because my stops are a lot wider. I look at that and go, that's the time to do it. Trading into a gap, everybody, is tying it clearly stated. It's just too difficult, because you just don't know what they're going to do. You have to wait till after you see the reaction of it. And so thank you for clarifying that.
Sounds good. Yeah. I think today is a battleground day. I think it could be a lot of back and forth.
Totally.
So I'm ready for that, and I don't want to get chopped up. So I don't want to be I don't want to be fighting for pennies and nickels when I could be making easy dollars, So, so like, well, yeah,
Exactly.
I'd rather just wait for confirmation rather than be in the battleground, basically. And then you're more, I personally, I know that I'm not that kind of trader. Like, I'd feel more nervous about those kinds of trades. Like, oh no, this is the last line in the sand. Let me get involved in that last line. Nah, I'll let like the larger entities do that, and then I'll see the reaction there and see if, like, okay, there's a lot of money and orders coming in now, like, and it shows through the candle bars there, whether and how energetic they are and to those levels. So I'd rather get in after that fact, because then I could feel more comfortable where I put my stops as well. But yeah, I think today is going to be a really interesting day. It could be a larger range day, and also it could just be a little bit of back and forth during the first 15 minutes. I think that'll set the tone, though. Like, if there's a large, Yeah, I think the first 15 minutes will set the tone of the day, honestly. We'll see. In regards to if we're going to manipulate wick that cleanly and then come back up, or is it just going to be like a death candle down, then you could just have a fast another second down day. I don't know. It could be that too. Yeah. It's a fun market though. It is. I'd say.
Yeah,
I
I think short-term day traders are going to have a lot of action the next couple days.
yeah, I like playing larger ranges more than smaller ones. There might be more volatility, but like
Yeah,
I
true.
always feel as though like the targets get hit faster. Yeah.
Yeah. Well, as we run up on time in your segment, first I want to plug again, everybody go check out the video that Tanya did with PAX. I didn't get a chance to watch it yet, but I will. It's on Tanya's
Doing
YouTube
really
channel,
well.
and of course Tanya
It
is
has
streaming on there.
Thank you. Yeah, it's doing really well. There's already 10,000 views on it, and I think people are finding a lot of value in it. And I'm very thankful to be able to sit down with experienced traders and learn more about the craft and longevity. So yeah, head on over after the trading session's over. Check out my interview with Pax.
Yeah, absolutely. And again, Tanya, this is our Friday. Thank you so much for joining us.
Thank
I
you.
wish you a wonderful trading day and a great weekend, and I will see you on Monday.
Thank you. Ciao.
All right, traders, my boy Christian, Trading Boxes, going to be live trading with us today. Christian, good morning. How are you?
Hey, Deli. Morning. How's it going with you guys?
I'm doing great. I think this is a perfect day to have you on because you are so disciplined and I love your style. And I'm very curious to see how you lay out the day. So I think we probably almost just get right into the charts. I'd love to see your prep, as we're getting ready for the bell here in, 13, 14 minutes.
Yeah,
What are you seeing, my brother?
absolutely. All right, so let me share. I'll be sharing a 4-hour chart first. While we wait here. So I do a little bit of my planning on TradingView. And in here we have the 4 hours. So what we saw over the last 2 days was a breakout of this last week's consolidation. We were sort of looking for that weekly lower high, right? We had this big move lower. We started bouncing. We're saying, okay, can we bounce and find some sort of weekly lower high? Can we reject from there? Or find acceptance, hold, and then push a little bit higher towards, I think we were both looking for higher levels. And I know you probably are still into like that 59.30s, I believe is what you were looking for. But we ended up finding resistance right under prior month highs here in this purple line for ES. NQ did take out the prior month high, so we had a divergence there, and then that sort of triggered the rejection back down. Since then, we have come back down into the weekly open, sort of back testing last week's consolidation. So you sort of have to lean on that on that stronger structure to sort of say, okay, we're seeing a initial push lower into a week-long consolidation. Can we hold? Also, another confluence point is the weekly open. Can those two hold and give us a bounce back up to sort of either back test the breakdown that we had yesterday, which I have this in this red zone. Let me actually zoom in a little bit more in case you guys aren't able to see, but oh, it looks good. So can we hold here and then back test higher? If it fails, I need to see some acceptance here to indicate that buyers aren't stepping in again. For example, we can see something like buyer stepped in right here, buyer stepped in right here. Can they step back in here and drive price back higher in order to create a tighter range? I think we're all expecting some sort of range bound structure. So can we see that on this larger time frame to sort of help us indicate, okay, can we align with the trend and reverse back up? If not, we break both of these back test areas and push lower. So that sort of gives you the idea of trend on a larger time frame. Now, if we bring over the hourly. Now, on the hourly here, I follow a very consistent approach or model that sets up over time, whenever a hourly 9MA or any time frame, a 9MA is this yellow moving average, whenever that 9MA trend ends, we sort of revert back up into the mean, and that's this shaded red area here in ES on the left, and then I have NQ on the right, and that's resistance, right? So once a trend ends, let me draw this real quickly since price is not really doing anything. This is an uptrend. And then once it ends, we sort of go into a contracting structure where instead of having a higher high, higher low structure, we go into a swing high, swing low, lower high, higher low. So now the trend is contracting and therefore we don't have expansion. We don't have higher highs, higher lows. So that's what we're seeing here. But on the opposite side, we were seeing lower lows, lower highs. Now a swing high, a swing low, and now a higher low against a swing low. So lower high against a swing high. So you can see that we're contracting here. And the idea here is that this is now going to give birth to a new yellow moving average trend, which are these sort of scenarios that I've drawn. Scenario one being, hey, in alignment with that whole back test of the weekly open, that last week's resistance, can we hold, can we continue to remain in this sort of wedge structure, maybe a small failed breakdown into London lows, reverse back up, test London's highs, and reject back down, keeping us in a range-bound structure. If not, then what we need to see is acceptance on either side of this wedge or these other support and resistance zones that I have here. And if that does take place, we then get if it's higher, we get that expected move that we had on that 4-hour time frame, right? Where we were expecting a back test into last week's resistance, now turn support, and then it pushed back up. That would look like acceptance on the hourly. It would look like an hourly 4-6 candle consolidation and a next, directional push up higher into a new hourly 9MA uptrend into sort of back testing the breakdown from yesterday, 5793 to 5800. For NQ, it'll be looking a little bit the same. Can we hold the weekly open? Can we hold sort of this 20,000 area, bounce back up into the prior weekly high, which has sort of capped that bounce overnight, continue to create this range bound structure, or do we find acceptance on either side and then break out higher or lower? If we do break down lower, I'm still not 100% convinced we see a big push lower until we break we close the gap, we find acceptance there and break lower. And I think we can still see a bounce there, because if you look at the left side action, you can see that most or the tightest contraction that we had here in the last week was between this 5650 to 5720s, maybe 5730 area, right? So I can still see a scenario where we come back down, push lower, really, really test that contraction area and see a failed breakdown of this hourly wedge, right? Which might look like a break lower, failed breakdown, sort of back to that 5743 London's low, and then reverse back up, right? And that would be sort of the hourly main structure that we look for. But again, we won't know until we get it. And I would have a better idea of what that looks like if the hourly 9MA fails to reject price down when it sort of comes back into it, right? So what we need to see is a move lower, price bounce up, the 9MA here comes in, it should act as resistance. It has to act as resistance in order to continue that lower low, lower high trend structure to remain in place. If we do not get rejection from the 9MA, then we get a failed breakdown, a reclaim of that, and then a potential move higher. A little bit of a couple of drawings here, but you get the idea, right? I do have to think that we are continue to be in some sort of bullish structure because we have not invalidated last week's resistance, now turn support. And it is a little bit of choppy here. It's a little bit uncertain. We are seeing, let me go back to the charts here. We are sort of breaking down out of this sort of tight contraction here. We've got a very good breakdown here.
Yeah, we're sitting near yesterday's low now.
Yeah, so can we hold this test lower, or I need to see, in order for me to participate in a breakdown, I need to see acceptance. We need to accept this area. The last two examples here was not acceptance. It was a sort of a V-shaped reversal. And for me to take a short here directly, my short should have been at the break of this consolidation, which is like a wedge or a box, right? Trading boxes. And then participate in that lower time frame 5-minute downtrend. So while it's still a viable setup, it's sort of saying, okay, do you want to short into that potential support, risk one to maybe make one or make two? Or if there is a failed breakdown, do you want to take that reversal, risk one to potentially make 6 to 8 times your risk, right? So that's sort of I sort of have to grade those setups and say, okay, do I like the idea? I am a little bit aggressive, and I can be active and say, okay, I'm going to short it. I'm going to take partials into 1R, and then if it reverses, I'm going to get back long again. So, but I wanted to make sure you guys got the plan. I know there were a couple of messages last week that the plan was sort of going into the market open, and I want to make sure I got that before we opened here, and then now we get to see and wait what happens.
Yeah, and so right now, the thought process is, again, like we've all been talking about all morning, is patience. Let this thing play out a little bit, and we just need more information. And I know that everyone comes in after a busy day like yesterday, and over anticipation, I think, is what kills a lot of traders, or trading the middle too much. It's a day about letting things come to them. And one of the things that you do that is, it's a little different than some of the other people maybe on the network, is that you actually kind of draw out. I know a lot of them, other of them do, but you really do a lot of planning of scenarios with the drawing tool. How much does that help you in a scenario of paint a picture, even though that may not necessarily come to fruition, but it helps you as you're drawing it, get yourself in the mindset of like, if this happens, this is what I'm going to react to, versus like, oh, it's, not doing that, I guess, basically should say.
Yes. So the drawings help me plan the day. And my job then is at that point is to show up and execute, look at the price action, look at the trend structure that I follow, and align myself with that plan. During, the market open or while we're trading, our emotions may be high. And sometimes I look back into my trade plan and says, oh, that was completely right. And I did something during the market open or during the day that didn't align with that. So the repetition of creating that morning plan, and for me, I create that afternoon plan based on larger timeframes, it allows me to sort of have a mental picture on an ongoing basis to say, this is a daily and the 4-hour trend. This is the hourly trend. I have an idea of what that looks like. Let me show up and see what the 5-minute or 2-minute entry models then, right? The rules that I require to be met to trade show up and I execute. But it all starts with the plan.
Yeah, absolutely. It's funny. So Bell in chat goes, craps the bed and fills the gap below. Nothing fancy. Same shit like every other day. It's kind of funny to me because, you think about people's mindsets coming into the day. We've talked about this a lot, Christian, before I let you go with the bell and let you go and do your thing. Stream chat. We'd love to hear from you guys. And I'm sure Christian throughout the day will be answering a lot of your questions. He's fantastic at laying out exactly what he's looking at. Environments are so important to me in my trading. Where we are from one day to the next, I think, is so key. I love how you lay out your plan and you're coming into each day and mapping it out, and using the tool, because I think that it actually triggers something in your mind to help you with patience and discipline. I've never done that, but I see you and maybe a couple other on the network do it, and I really like it. I think that more traders should do that because I think that just the act of doing that helps them. But what gets interesting, Christian, is that we went from a real busy market to a slower market where people probably were, getting used to the volatility, and then we're going in and out of those stages right now. And so it's one of those things. Because my last question before I go is, how do you set your mind up for position sizing coming into days like today? Because we don't know if today will be like yesterday or the day before or what we saw last week, right? And so stops it's hard to, I think, gauge on how wide, stops need to be for the real short-term traders right now, because we're not really in a clear path of what volatility is going to be. So I'm just curious how that works for you.
So I have a more rules-based approach where my position sizing is based on two factors. One is the entry model that I'm looking at on the 2-minute or 5-minute. So depending on my historical research has told me that, for my average setups, my average models for NQ, it might be 25 to 35 points. And for ES might be 6 to 7.5 points for a 5-minute setup. So depending on my plan, depending on what I believe is sort of happening, and if I really know what's happening on the daily or 4-hour, I'll then adjust my position size based on the percentage of the account that I want to risk. Typically for this account, I'm risking 1% of the account for every trade. So that 6 to 7.5 point risk in a ES, 5-minute setup will play out like that. If the spread between the entry and the exit is smaller, maybe 3 points, then I know that my size needs to be double that in order to keep that 1% risk at the same time. And the rest will sort of work itself out. The volatility here will sort of dictate that. Last week, 2 weeks ago, the VIX was high. The spread on the stops was anywhere between 20 to 30 points, and NQ was 60 to 100 points, right? So it really depends on that, but I always 1% or a little bit around it to remain consistent, 1 to 3 trades a day, and move on and wait for the next day.
Got it. Thank you so much, Chris. Everybody give Chris some love in the chat today. I'm turning the keys over to you until the 11 o'clock hour, Chris, where Cagnina will come back on for Hot Commodities with Tracy. I will be watching. It's always great to hear from you. So many traders out there can take notes from the way that you go about your business. I love it. So I'll see you in the chat, my brother. All right, everybody.
All right, Dilly. Take care. I'll see you soon. All right, guys. So ES hit the weekly open. It's sort of bouncing. We're sort of seeing that first relief, or attempting to have a relief bounce from this sort of 5-minute breakdown. And what I typically want to see now is, I don't have the drawing. Do I have that drawing? We have a lower low. See how the lower high against this breakdown is? Because look, at the same time, I am looking for a possible failed breakdown here. So if this lower high fails to produce a new low, then what we could be seeing is a reclaim and reversal, and that can trigger that hourly reversal back higher. NQ is a little bit stronger. Oh yeah, NQ is much stronger. So, I like to focus on relative strength. And if I am looking to participate in a long, I'm looking to get long the leader. So you can see the difference here in this 5-minute candle. NQ is leading the way, but we don't have any confirmation yet as of, this is our lower low, lower high. We need to fail to produce a new low to set up a reclaim and reversal higher. Small gap down on the RTH session. Let me go to the 2-minute here. Lower. All right, so the hourly wedge that I shared is breaking down. We need to now look for some participation. So we can reclaim 43, we just rejected it. So this, if I do this, this is now resistance, and what we need to reclaim. All right, let's see if we can get some sort of structure here to participate. In order for myself to join, the breakdown took place earlier. This is still part of the trend. I need some sort of longer consolidation here so I can manage my risk a little bit better. Entering here on a breakdown for me, for my approach. I know others could probably short that. But consistently for me to short that, I need to get a little bit more consolidation here for my entry model to appear. So let's see what happens here. You know, that 4-hour chart that I did share, we do have some divergences in NQ. Oh, not in barely. ES has no new low yet, does it? It's flirting with a new low. NQ did make a new low. So you can see the breakdown that we have here. We're breaking these wedges here on the hourly. So as long as 57.43 now in ES and sort of this prior, weekly open at 2050 in NQ, as long as they hold, we can sort of look for a continuation lower. NQ is already about to close that gap, or it possibly did already. 977. Yeah, it closed that gap. So look, this is my last sort of line of support into this 930s, and we need to see some sort of reversal here in order to really get that push higher. If not, let's see if we can participate in a breakdown here. Yes, much, much weaker. Yes, targeting last Friday's low. Let me look at some charts over here. $57.25 in ES. That's your target. It's a good one. I have this 1820 that we sort of need to hold. Let's see if we. Yeah, it's just we're so extended to the downside. I need to. Next support is 930s in NQ. NQ completely. We have a lot of weakness in tech and semis. All right, I'm gonna have to wait and see what kind of support we find here shortly. Good short though, if you guys caught that. That breakdown is what triggered the sort of break lower. Right here, this range. We back tested it right at the open and rejected back down. So we're coming into some support here. Below 5,700. I like it. Yeah, gap filled in NQ. ES is still above that. That was a good short, guys, for those of you who caught that. Let's see what this potential rest here looks like. Yes, I think yes, once it closed the gap at 22, it's so close. Good breakdown here. Just got to be patient and wait a little bit, see what we get. I mean, 3 points away from closing the gap in ES, it might as well just close it. NQ can come down into this 33 zone. Was that close? Complete breakdown, 15 minutes. All right, so this is where we'll know if we really do want to continue lower. You know, we didn't really get acceptance at these lows. We sort of just broke lower. And for me, the breakdown really occurred when this prior box broke here. Yes, once that gap closed. Where is it? 57.22. All right, so ES into the gap close, NQ already below it. Delta straight down. This is that last area of support that I wanted to look for. Now let's see what happens. So far, if I bring over the hourly again, you can see that we followed scenario 2, which was a breakdown from this wedge over into the next area, the targets that I had for both ES and NQ. And the contraction, that super tight contraction here is what sort of led to that breakdown. So from here, can we hold and bounce, or do we find acceptance, consolidate, and then break lower? So with those scenarios in mind, what I need to look for is for my approach, for this lower low, lower high downtrend to end, and then can we sort of create some sort of wedge here, and that can signal us, hey, we are finding acceptance, and then we break lower, or we attempt to bounce to backtest this 57.43 and can we sort of, reclaim that, possibly get a failed breakdown? Tough to say at the moment, but we will have to wait here. No, this is that bounce into that next lower high, lower low. Oh, that's not what I want. Lower low, lower high, second lower low. So we're sort of seeing that bounce now. From here, we'll have a better idea of, for both ES and Q, we'll have a better idea of what we want to be looking for. Lower low, lower high, lower low. We do have RSI divergences, which I do look at that. And see if we can sort of bounce. I do like the idea of long. Let's see. Yeah, I do like it. Let me start with half. So I'm looking to see if we can bounce. It's a little bit on the aggressive side, but to me, this is that last area that we need to hold. Let's see. So we have the 2-minute, the 5-minute lower high here. I'm looking at another chart. Let me bring up the 5-minute here. Might close it and wait for the 5-minute lower high. So what I took a 2-minute trigger, but if I'm a little bit more patient, I can wait for the 5-minute. Might close it here and wait. The 5-minute is what's making that lower high here. Let me zoom in a little bit better. You know what? I'm gonna wait, and I'm gonna look for a 2-minute. So I have two entry models. One is a 9 EMA reversal, and the other is a 2-minute wedge. If we can sort of reclaim this 2-minute 9 EMA, that'll give me a better idea. But I don't want to get overly aggressive into sort of the breakdown that we're seeing. So let's wait and see. On the 2-minute, I need to see that contraction. So if you guys remember what I shared on the hourly, when the 9 EMA trend ends, lower low, lower high, lower low, we start to create a wedge, right? And then from that wedge, we get a breakout or breakdown. I do like it. Let's see what happens here. We're in that 5-minute lower low, lower high structure. That's what really needs to reverse in order for us to get a breakdown.
Order filled.
All right, so the 5-minute is bouncing back up. We're into that resistance area. $934. Yeah, seeing a failed breakdown possibly. I do need to decrease this a little bit. Let me break down. Let me cut to.
Target filled.
So I closed a little bit. I still would like to build into this position. I still remember that idea of seeing that failed breakdown. I still like that. I think if this really is reclaiming the sort of breakdown area, then what I would like to see is price sort of come back into that 80s zone and so we have a 5-minute. Let me go to the 5-minute here. We have a 5-minute 9MA reversal. ES is much stronger. Feels much stronger. So for the 5-minute in ES, we have that lower low, lower high, second lower low, second lower high. So we're reclaiming that instead of pushing new lows. So we're back testing this 43 zone, sort of that weekly open. Can we hold it or do we need to reject? How does that rejection from there look? You know, if we are to continue lower, this rejection does need to bring us to new lows, like absolutely. If it fails to reject, then what we're possibly looking at is a failed breakdown. So that 2-minute entry that I had earlier was right, but at the moment, I wanted to wait for a little bit more confirmation. So I brought my size down a bit just because the spread between the entry and the risk was too high. Now let's wait and see what happens, right? Do we reclaim that? Do we fail? the tape can slow down a bit here. If we can reclaim these 40s in ES and then this sort of the weekly open in NQ, I think there's a better chance of us getting that failed breakdown that I talked about. All right, let's see. There we go. We're getting that failed breakdown that I talked about. Let me actually bring in my... So the 5-minute entry on that 9 EMA reversal model is here at 24. And I like to take partials into 1 point. This has to be here. Into 1.6 to 2R, which is this 260 to 300% standard deviation away from the risk that I have on, right? So I want to take off half into that 1.6 area. I did take partials a little bit just because my size was too big for that 1% risk that I'm trying to allocate per every trade, right? So if I can remain consistent in risking 1% of the account on a, maybe not daily, but on a per trade basis, then I'm always managing that risk and not exposing my account to more. If I size up my trade in an area where I'm a bit uncertain, it doesn't make sense. It's not going to align with my risk management process. So what I then am looking to do is I need to decrease my size in order for that 1% to remain fixed. And then, like I did now, I'm now in this trade, I'm in this position. I am looking to take partials at 1.6R, which also aligns with this 164, 160 zone. And that's sort of, if I do take partials at 1.5 to R, what I'm able to do is then I move my stop on the rest to break even, and I lock in a profit no matter what the trade does. Yes, I'm potentially looking at a big reversal back higher, but I need to manage my risk, right? Because, you know, I like I said, I come from an institution background, and so trading a $10,000 account to a 7-figure or 8-figure account is completely different. And that sort of risk management has brought back into this approach. And what I am then looking to do is I need to manage that consistently, right? So we're sort of stalling here into this 0.80s in NQ and in ES back into this 55 area. We did reclaim that weekly open in ES. In NQ, I believe we did as well. We did. And as long as we can hold it now, I am looking for for a price to traverse back across that hourly wedge structure that I talked about. So let me go ahead and share this sort of plan again. So here was that morning plan where I was talking about scenario 1 being either we remain in this wedge structure, or scenario 2, we move lower, we sort of test the line in the sand, right? The last area of defense. We hold there, reverse back to that breakdown area, which was 57.43 in ES, and then NQ was this 20,000 to 20,020. I don't have it drawn here, but we reclaim that and push back to, you know, we're traversing back to the other side of that hourly wedge. and I want to target that area, which means for London highs would be my first main target. However, and once that happens, can I look for scenario 1.2, right? Well, for that to happen, we need to find acceptance at these prior swing highs and then break higher. We did see that failed breakdown. We are getting that reversal back up, and we just have to wait and see what happens. But look, guys, I think you guys caught a great short. I could have taken it as well. I think I wanted to focus more on my plan. Now I wait to see what happens. Can we continue higher? To me, we're getting a failed breakdown. So I just need to be patient, right? I was patient and waiting for the trade to come to me. I am now need to be patient in letting the trade work for me, right? If this is the trade that I planned, the requirements were met. Now, can it turn into a loss? Absolutely. But at the end of the day, my grading is A+ as it gets, right? Like I sort of share what could happen, the scenarios, the line in the sand, and now we're sort of waiting, right? And now we have to motivate it, guys, right? Can you take us higher? Right? Something to get this price action up. So I'm just going to wait here, guys. Now, if I felt really confident on this, guys, I would be long both ES and NQ, right? But it's in a tricky spot, and I don't want to sort of get superly aggressive. Coming into 1R of the trade. Come on, let's get that push, baby. Give us that 1.5R. Come on. It wants London's highs. I mean, I give us London's highs. We actually can find some resistance here. I'm looking at SPY and Q. I do track that. But I'm just going to be patient here. Do I want a close one? Let me see. I'm still getting used to this. So let me see if I can break it down into selling 2 only. I forget how to do that. Do I want to pay myself and keep? My concern is that we chop here because we are in a 4-hour consolidation. So the momentum to really drive price higher may not show up after this sort of break here. But we'll see. We got the failed breakdown, right, guys? I mean, that's what I was pretty much looking for. Listen, I got to compete, Deli, okay? It's not just the hairs. I have a voice. It must be heard. Just kidding. What's my background? Kidneys. Kidneys are my background. You see that drawing up there? It's not. It's a picture of a kidney. Leo, you got to sing next, brother. Come on, sing it with me, guys. Can you take us higher? How do I find the zones? I have spent a indefinite amount of time over time. Why did I say that twice? But I spent a incredible amount of time trying to perfect these support and resistance levels. And I mean, I've changed them so many times, and I think these are perfect. So what these lighter zones cringe. Excuse you, Laura. Laura's part of the group. But these, oh, so I come from an RA background, financial planning, financial advising. You know, I wanted to get into the industry because in 2008, you know, my parents lost everything. My family lost everything when my kidney failure happened. And so not only them, but a lot of people that I knew saw their, you know, retirement accounts go down. And in my case, you know, when you get a 50% drawdown like that in a large savings account, essentially, and your child is going through a life event where you need to spend 20, 30, $50,000, well, that kind of hurts, right? And so I won't get into that whole story there, but that sort of is what drove me into this. That sort of drove me into this sort of area. I'm trading NQ here on the right. It's MNQ, MES on the left. I'm looking for higher. I'd like to see. I want to change this. Actually, I want to keep this, but I want to. I forget how to adjust the contract size once Oh yeah, so about the zone. Sorry guys, thank you for bringing back to that. So these zones, these darker zones represent the environment. So remember I talked about 5743 in ES. If you know, it's sort of stalling. Let me break one down here if we can sort of hit 1R. I just don't want to give too much back, and I'd rather sit comfortably. Like I said, 5743, right? You see how that provided support? Let me. So you see how this 5743 was, we saw a failed breakdown. Can I have a marker to draw on? I don't see it, but these darker zones represent the environment. Whenever we reclaim one or get above one, what I expect price to now do is to reach this other darker zone. Now it may not happen, but you know, price will have a very funny way of reaching these zones that I draw. You can see here, we sort of had a failed breakdown yesterday's open, and then we sort of reclaimed and pushed directly into that middle zone, right? Came back in, held that zone, pushed back up. One second, let me close one here. And I'm gonna keep the rest here just so I can sit on everything else. Can't I adjust? I forgot how to do that, guys. I'll figure it out later. But what we saw now is another failed breakdown of this dark red zone. And what I'm looking for price to do now is reach this 5768 zone, reclaim that, and then get back to this darker zone. The lighter zones, they represent the bull bear zone between the darker ones. So in order for price to reach the darker zone, we need to find acceptance above this mid zone. And then these darker zones are sort of like 5-minute zones, right? Just something for me to be aware of. Like right now, ES is stalling at that 55 area, which is a 5-minute zone, but it's an important zone over the last 2 days, right? This is where we sort of found resistance pre-market right before the open, and we broke lower, and now we sort of back tested that, right? So now we need to see acceptance there on a 5-minute time frame in order for us to really get that additional push higher, right? So this may look like sort of ping pong here, and then we get that push here to take out the sort of highs right here, you know, to grab to take some stops, right, on shorts. But that's what these zones, yeah, we are back in a chop. Thanks, Johnny. We are back into some choppy area, which is why I wanted to cut that a little bit lower. What am I looking for these zones? I can't just keep going back to your comments just right there, Shab. I keep going back to it and I laugh. I'm looking for interaction there that signals, strong areas of support and demand. Let me show a good example here while we let this NQ trade play out. So for me, the interaction looks like acceptance, okay? Can we sort of find acceptance there back and forth? Or, for example, this is a rejection, not acceptance. This is a rejection, not acceptance. Here, we spent an hour, maybe an hour and a half consolidating here. That's acceptance on a lower time frame, right? We then broke lower. We came to back test it, failed breakdown again on a lower time frame, and pushed up higher. So to me, this area is very, very strong interaction from price. Eventually, I spent time going back and forth to sort of visualize what that meant. And you can see here that, can I move this? Oh, no, that's not what I wanted. I'll fix that later. But this interaction here is what tells you sort of, hey, resistance, we broke out, we back tested at support. I see this as a failed breakdown, sort of. It is a failed breakdown to me. We didn't really break lower, right? So if we're not breaking lower, when we break that zone, it's a failed breakdown, right? If this broke lower, this would have been acceptance under that zone and continuation lower. But you can see how it was only when we broke this and then back tested it. Oh, that's not what I want. So we back tested it here. And that sort of triggered that move lower. So if we go to the 5-minute here, that's sort of an idea of what I look for, right? I am looking for rejection, acceptance into these areas to sort of tell me, hey, can we continue lower? Can we continue higher? I mean, there's a longer explanation to this, but you sort of get the idea, hopefully. Look at this interaction here on the 5-minute. I mean, I think everybody, Leo, Kane, you guys were looking for along here, not here, sorry, here. And it lined up right exactly to that 57.43 zone. I got short here yesterday near the end because it was sort of back testing. It was the first test of this 2050 EMA cloud that I have here, and in a strong downtrend. I mean, I won't go into it here, but the first back test of this sort of resistance area is always sold. So what I looked for is a 2-minute reversal here, a bearish reversal, and I participated in this move lower. I stepped away, and so I missed this, but I'm glad you guys caught this bounce. But you can see that interaction here between the zones. It's almost perfectly. Then you have a failed breakdown, reclaim, back test this sort of these zones, ping pong back and forth. And now we're sort of back testing it here. Can we hold? Can this now become support? Right. So I'm actually working with Ninja here to create an indicator for my zones. Until then, I have these manual zones that I've put, but hopefully soon I can have these automated. And so the idea now moving forward into the rest of this trade, hopefully, is for this back test to hold, 43 to hold. And NQ would mean this 2020 area holds, and we push out higher, right? Something like this blue scenario here. For NQ, it looks something similar. Back test holds, we chop around maybe, and then push up higher into the 240 zone, which is my main resistance, although we can target this 145 area as London's high and see if we can break out higher. Oh, thank you for that, Johnny. I remember that when I right-clicked it, it sort of, you know, when I was able to right click it, it would allow me to change it. I don't know, I may be missing something. So if I select this, can I? No, it still remains the same. Yeah, I'm working with them to create these zones as an indicator. So we'll see. Hopefully, it's coming along. They look good. We need some final touches. But you know, these zones really help me a lot. Like it's, you know, I sort of say environment, trend, and once you change the order and trend, your mouse commands reflect on the order quantity value. Let's see. Yeah, I don't see that. I need to cancel the order. I don't want to cancel it and close the position. I'll figure out later. It was so weird. Yesterday I was able to do it. I don't know. I'm missing something. But either way, it's a great trade. Thank you though, Johnny. I'll look into that. So like I was saying, these zones, guys, you know, it's environment, trend, setup. So the environment, these zones help me understand that environment. Are we in a bullish or bearish structure? If we reclaim one, oh, really? I'll go into that in a sec. If we reclaim a zone like this 43 area in ES or this sort of 2000, let's call it in NQ, then the environment has slowly why wouldn't I take one off at these zones? Well, I did take one off, to be fair. I did, you know, I had 4, I had 6, I took 2 off, I took 1 off into this 85 zone. But, you know, my rule says that I do need to wait for 1.6 to 2R up here to take more off. If it comes back down and it stops me out, I have to be okay with that because over time, waiting for this 1.6 to 2R area to hit, I will consistently do better, right? So I can't just manually. Oh, that's Johnny, you got it.
Order submitted.
No YouTube. I'm just on X trading _ boxes. Thanks, Johnny. I think this will change to 1 once the 2 is taken out, if it's taken out. No. All right, so I have to wait. We can find resistance here. We can reject back down. The failed breakdown attempt can fail, but you know, over time, the scenario that I drew on that hourly failed breakdown, I have to give it time, right? It's an hourly failed breakdown. So look, we're back into a range to that hourly wedge, right? So I need to be patient here. I shouldn't overtrade this middle zone area. And either my trade works or it doesn't, right? I show up, maybe there's another trade later in the day. If not, I show up again tomorrow and follow that structure. You know, and then tomorrow may look like, okay, well, did we consolidate all day? Remember, scenario 1 for both was that we just chopped around in this range. We're sort of seeing that, right? And what this morning's drop was a failed breakdown to really test that last line in the sand and now push back up. Right now, if I show the 4-hour here, So the 4-hour, this is that sort of structure I was looking for, right? Can we come down a little bit more to really back test this sort of contraction area? We did that in ES. For NQ, can we move lower, close the gap, and let me make this bigger, and test this 930 sort of hourly zone and then bounce? Hey, guess what? We did that. So now we're back into this big block of sideways action. I do not need to overtrade that. I do not need to try and find the trade in there right now. And I just need to wait to see if that hourly failed breakdown does take place. Why do I like using a 4-hour chart? I like because it gives you a good understanding of the largest, the daily is the largest, but it gives you a good understanding of the governing structure that the 5-minute will follow, right? If on the 4-hour, we have again, I follow trend structure a lot, right? So lower low, lower high, second lower low. Now, my research has shown me that 80% of the time at the second lower low, the trend is over. We should get some sort of reversal. There is a chance that we get a third lower low, but that is a climax sort of top or bottom that we reversed, right? So that governing structure here of the second lower low on the 4-hour, as it backtests this strong area, tells me, hey, and there's RSI divergence, okay? I know many not like it, but I like to use it in alignment with the trend structure that I just discussed. So to me, that tells me that this new low is invalid on this 4-hour time frame. If that is happening on the 4-hour time frame, then the hourly, right? So again, if then else, if we're seeing that sort of invalid new low on the 4-hour, what that will translate to on the hourly here is a hourly failed breakdown of this wedge, where we get scenario 2. We move lower, we create a lower low, reclaim that breakdown area into 43, and reverse back higher, right? So that's what I'm playing. So then, okay, so then you take it a step further. If we are seeing that hourly failed breakdown, what is my execution need to be on the 2-minute or the 5-minute to participate in that hourly failed breakdown, right? Well, I have 2 entry models. One is a 9MA reversal, like you guys saw, which I entered at the 5-minute lower high reclaim, which let me draw this out here. We have a lower low, lower high, second lower low, into the 9MA is the lower high, and the second lower high. Now, in this area, we are to see a rejection. We are to see a rejection if we are to continue lower. If this fails, then there's a high probability that we're seeing that reversal back up, and we saw that, right? So I entered there. That's my entry. My stop goes at the lows because a new low will invalidate my trade idea, which is, if you guys were tuned in last Thursday, it was also the same trade idea, similar, that I took on Thursday near the end. I took a short when that last 9MA higher low failed. So it's always when that last higher low fails or when that last lower high fails. Why? Because when you have I don't want that. When you have a trend failure of that sequence of lower lows, lower highs, lower lows, then what happens is you now technically start a new higher high, higher low structure. You reclaim the last lower high, and therefore it's a fact, right? We can't argue this. You have now started, on whatever time frame you're looking at, a new trend sequence, which in this case has been a higher high, higher low. So my entry needs to be at that break that triggers a new uptrend, right? From that downtrend to an uptrend. Why? Because I am a trend follower and I'm looking to participate in the trend away from this support area. What happens next after that depends on the day, right? Depends on the data that we're having during the day. Can we come back down here and do something like this? Push new lows, get another failed breakdown and push back up? Absolutely. We see this in CPI days all the time, right? I can't control that. What I can control is how I manage my risk, 1% on a consistent basis, how I look to enter, my entry model with my rules and requirements, and my planning, right? What are the scenarios that I have in mind, right? So going back to that environment, trend, and setup, environment is where are we on larger timeframes, who's in control, buyers or sellers. Trend structure would be the second layer of that, would be, okay, within that environment, what is the governing trend? I need to align with that governing trend. And then setup, what is my setup that I will be looking to execute from a rules-based perspective to allow me to participate in that governing trend with that, in alignment with that environment, right? The bullish or the bearish environment. So I think I did that pretty well today, right? And that's what I look to do every single time. You know, it's always about, you know, I think we all go through a phase of just over trading, and a way to sort of help for that. I mean, it's not the answer for it, but what helped me is finding one really good trade, right? Mike from, and Merritt will know this, but Mike from SMB, Bella Four, I forget his last name, but he has a book called One Good Trade. And it just focuses on, hey, look, just focus on one really good trade with your requirements met. What are the confluences that you're looking for, right? Is there a divergences? Is there a fair value gap? Is there a divergence between ES and NQ into those new lows? Is it a Fibonacci pullback? Whatever it is that you're looking at, if you can stack those confluence indicators, then you can have an A+ trade. Yeah, you just need one good trade. Like yesterday's trade, guys, it was that short at the open. That was the best trade. You can't argue that. There were other setups throughout the day, but that short at the open was it. And my trade here in ES yesterday was this failed breakdown. I really can't zoom in on, well, I can't, but I don't know if it'll look good. Yeah, it won't. But my trade in ES was this failed breakout, and I got short, and I was able to participate in this breakdown. I took another short here when this broke lower, and then I took a short like I shared right here, midday, right here. I did miss this long, but it was just the end of the day, you know? Yeah, you don't need to trade all day, guys. Look, my main job is to really show up the first 2, maybe 3 hours. I am on the West Coast, so you can imagine that, you know, I'm trading from 6 to 8:30, maybe 9, and then I start my day. You know, I do trade full time, but I do manage, you know, money for some accounts. So I do swing trade. That is my background, swing trading. And yeah, thanks, Double P. I'm not going to say that. I'm not going to say your full name on stream, but yeah. Yeah, it's just trade the first 2, 3 hours. Look, my main objective is, because I'm a trend follower, I am looking to put on the trade, take half off into that 1.6 to 2R, and then leave runners on to participate in that intraday trend, right? And I'm looking to do that because I want to participate in that daily's candle expansion, possibly if it's there. If it's not, I'll take a stop eventually. But if I can do this consistently, and because of my background in swing trading, I have a good idea of what the daily trend is and how I'm looking to participate that, I can then hold runners like 25% of the trade for 2 or 3 days, right? I think the most I've captured in NQ, I mean, this is back when VIX was low, right? You know, in the last month, 500 points was nothing, but I think it was 540 points in like a 3-day trade. But you know, it's just I'm allowing myself to have the opportunity to participate in that trend if it manifests, right? If not, my job was done by taking half off at 1.6 to 2R. And that way, if then once I move my stop to break even, the trade is done, right? And so that's what I look to do. And now hopefully we can sort of break out higher. We're sort of in this consolidation here. Let's see, we're getting that potential breakout here. I do think my main target is London's high, and I do think we get that. So here's 1R on the trade. So if you joined, I tell those in the group, hey, pay yourselves, right? So yeah, pay yourself. You have to finance your risk. I know Kane doesn't do partials. I completely get that, and you can see why he has some big winners. But I'm from that background, that risk management is so stuck in my head, and to manage my finance my risk is what I like to call it. When I take partials into that 1.5 2R area, I finance my risk, and now I can remain in the trade risk free. I'll keep my stop at break even, and I'll look to see the trend possibly play out, right? And we're stepping into London's high here now. Yeah, if I have 2 losses in a day, I'm probably done. A third or fourth trade, I'm probably revenge trading if I'm doing that. Because look, in how I focus, there's 2, maybe 3 good setups a day with what I'm looking to do, right? The first one, absolutely in the first 2 hours. It's either 30 minutes, maybe an hour before the open, and then or within that first 2 hours, right? So thanks, Laura. So retest 2100. Sure. So what you could now look to see is a higher high, higher low, and then push higher, right? So now what we want to see is this area here to hold. And again, now I'm following the 5-minute uptrend, right? Which is this. Higher high, higher low. Can we get a second high into that area? And I'd love to take partials there. But we'll see. We just got to let it play out now. We're up 90 points. Beautiful filled breakdown. Just wait to see. London highest is a magnet now. It's close. ES and NQ. I teach a sort of private group. I think it's smaller than what you probably see online. Just because I was never into that big idea of having this massive group. But I brought up X because you can reach out to me there. So I don't think you need an account to message someone, but you can just email me at christian@paradigmshifttrading.com. And now we wait. I'm also working on a potential indicator for this R multiple. So what I've done so far is I've created a different template for the Fibonacci tool, and I did expansions, and then 200% is 1R, 260% is 1.6R, 300% is 2R. You get the idea. So what I'm looking to do is I have in green where my entry is. The next green areas are where I'm looking to take partials. Right, so that green area is where I'm looking to take partials. And then if we get to 4R, to 5R up here? I don't know. I don't think so. Maybe I actually do think we get that next into next week, but you know, for now, can we sort of reach the 240? That 240 was my main resistance, right? So if we were to break this hourly wedge that I went over, the 240 is my main resistance area, and let me show you why. So here's the hourly. If we look to the right, this is, you know, scenario 1.2 has a move up into that 240 and rejection. Just because of this interaction back here, you can see this was sort of a continued push lower, but test, bounce, breakdown, right? So bounce, rejection, back test, rejection, back test, rejection, back test, rejection, back test, sell off. So that's strong resistance to me. And I am looking for sellers to show up there again, right? And I think on the 5-minute, we saw some interaction there. Yeah, I think this was that morning consolidation. We came down, bounced, broke lower, attempted to back test, created that box, right? Trading boxes, or what I also like to call wedges. And I took this breakdown because it was a acceptance below that zone. We clearly had confirmation on this sort of back test that sellers were showing up. And so I participated in the continuation of that trend, again, because I'm a trend follower, right? Look, I think this is the only place in the world where I'm okay being called a trend follower, right? Call me a trend follower all you want. I'll participate in all these trends every day. The logic between these fib levels, just like I said, there are multiples. My risk is this. I want to take partials into 1.6 to 2R, which is this 260 to 300%. It's not a Fibonacci expansion per, say, you know, a 0.23, 0.50% expansion or the 1.618 expansion. I'm not really trading that. I'm just looking to take partials into 2 times my risk, right? I think I want to pay myself for the risk that I'm taking, right? If this is, you know, the business that we all say it is, well, I need revenue, right? I need consistent revenue for those periods where I may underperform, right? So who wants to sing with me, guys? Oh, we just hit London highs, actually. We made slow down here, taking out some stops. We got to be believers, though. Can we believe that it'll take us higher? Come on, sing it with me. All right, well, just practicing patience, not much to do. Great entry, great planning. Leo, there he is. Overnight highs coming up. Let's manifest together, guys. I see 240. I see 240. Look at that ES going into that London high here. Let's get an NQ up here. Come on, give us that to take us out. 125 points on the day. It wants it. It wants it, guys. So it's into this 5-minute zone here that I have here. So, you know, I consider that as like sort of like a pit stop, maybe a bathroom break on the way to the destination. You're flat here. I like that. Let's see if it can take me out here. I'll get out. It'll be like 1.5R. There we go, guys. Hey, Leo, thanks for tuning in, man. I like yours as well. Learning a lot from that side of the trading world. So we hit this 5-minute zone. We hit 1.5, 1.6R. I took partials. I'm now left to runners. And what I'll look to do here is I'm going to move my stop to break even, a little bit above break even. And that way I have no risk in the trade left. This runner can do what it wants, right? If it can reach that 240 target that I have up, cool, perfect. Peter, yeah, every Thursday. I'm here every Thursday. I don't have a YouTube channel. Yeah, everybody keeps asking me. I guess I have to create one, right? So maybe I'll create a YouTube channel. For now, just X. No Instagram, no YouTube. And now let partials do their thing. I think I'm going to take this off. I think we got the idea of the R multiples. So the 5-minute trend continues. Higher high, higher low, second higher high into that 5-minute zone. Can we hold any potential back test here? Or can we sort of shoot up directly here? Tough to say. Just have to wait and see what happens, right? But so far, you know, pretty spot on. Pretty spot on with our plan. Pretty spot on with the failed breakdown. Yeah, guys, subscribe to the channel. If you find all you know, every day we have really good traders on here. I'm lucky, you know, to be one of those. And just you know, I think this will be a amazing place where you guys just can show up, tune in, and as we're taking trades, we go over structure, we go over, you know, our analysis, and you have a, you know, somebody in your corner every day to help you stay aligned with the trend, right? I think it's fair to say that all of these traders that are on, we're all looking to participate in the trend in one way or the other, right? We're all participating in the same trend. We all have a different view of it. We all approach it differently. We all have our different entry models, but we're all participating in the same trend. So think of having a consistent trader as you're trading, just aligning with the trend every single day. Wouldn't that be great? So subscribe to the channel, support what you know, Anthony, Shab, and all of them at Ninja are doing, and hit the like, guys. Let's you know, support the cause here. It's a great education background. It's a platform, I should say. So by the way, let me show you guys something. Because you know, there's a repetition. You know, I think Mara was saying the other day, you know, the market is fractal, so all we are looking to do is price action repeats itself over time, over and over and over again. So if you really think about it, these trend structures that we're following, this 5-minute trend structure that I'm in, It's the same trend structure as the hourly or the daily, right? But just through a different filter. So if we go back to 2022 and that initial drop that we had, let me bring this over. So this is, oh, actually, let me compare those both here. This is 2022, okay? We had that big drop, we had that 9 MA consolidation, and then broke out higher towards that 2050 EMA resistance, rejected, came down into the 9, but also back tested this sort of, prior week resistance, turned into support. Does that sound familiar already? Because it's exactly what we did. If you look at the daily here in ES, you have this breakdown, bounce into the 2050 EMA resistance, reject. Where did we backtest, guys? Last week's resistance now turned support. So is that not repeating itself, right? And how is that happening from a trends perspective? Higher high, higher low, higher high, higher low. So the trend is aligning with that. You're sort of backtesting this prior resistance, now turn support. What you need to see is acceptance at that support area to tell you that, hey, we're not going to bounce, but instead we're going to break lower. And until you see that acceptance, you don't have confirmation of that breakdown, right? Which brings back that 4-hour structure here. We wanted to look for a reversal into that back test until we found acceptance and broke lower. So you see how it's, it's following the same structure for both in ES and NQ. We had that same pullback, and I am looking for a retest of that of yesterday's breakdown area at a minimum, which in NQ is a little bit higher, but it, it's a beautiful failed breakdown here. Let me show you guys the 15-minute here. Here's a 15-minute. You got your wedge breakdown. You have the failed breakdown lower. Reclaim that breakdown area. London's low, weekly open, 57.43. All these confluence points, right? For NQ was that London low. It closed the gap, reclaimed 20,000, and it just straight up, right? From failed moves come fast moves, right? Don't we hear that all the time? Yes. So now what you want to see is scenario 1.2 play out for both, which is for us to hold now any potential back test here, right? We back test the 68 area, consolidate, create like a sort of 9 MA consolidation. Same for NQ here. Back test is wedge break resistance now should be supportive. We are to continue higher, and then set up the move for the afternoon for higher, right? Or possibly tomorrow. But the good thing about my entry and my approach into sort of swing trading, right? The intraday price action is that I can keep this partial on for the rest of the day if it doesn't stop me out. And now I give myself the opportunity for price to go even higher if I had more partials, right? Even higher into maybe yesterday's high, right? So it's always if then else for me, right, guys? If we get a breakdown lower, then can we see a failed breakdown? If not, what else is going to happen? What can structure? What is the context, right? What does structure need to do in order to confirm a failed breakdown or a reversal back, a continuation lower, right? Now, if we reverse, then we saw that failed breakdown. Okay, go back to that if. If we see the failed breakdown, then we look to target London's high. Hey, guess what? We're here. I don't have it drawn on here, so let me bring ES 5 minute here. You see this London high mark? Hey, that was the target, right? We hit that. So if we get failed breakdown, we target London's high or the top of the wedge. We can check that off. Then now goes into the next if equation. If we can hold this prior resistance, maybe consolidate into 5760s, 5770. For NQ, it would be something like 130s, 140s. If we can consolidate and hold that, then we can get a continuation higher to the next darker zones that I have up here. If not, well, guess what? We're probably going to remain range bound and break back down. And that's what scenario 1 was. Find resistance into this London highs. We overshot it a bit and push back down, fail to hold, continue this chop, which we can see, right? Question on how do you define acceptance? Acceptance to me is a consolidation, maybe, in a high VIX environment, maybe it's 30 minutes to an hour. In a lower VIX environment, it's 2 hours maybe. And that will sort of look like a ball bouncing as it loses power. So that could be something like this. Bounces, finds rejection, bounces, rejection, bounces, rejection. And you see how it's sort of losing steam, and then you get a breakdown. That's acceptance. You can call that a wedge. I call it a wedge. You can call it a box. I call it a box, right? But either way, what this shows you is that sellers are stepping down from here. They're stepping down from here, meaning they're not letting price get that follow through on that bounce attempt, right? And they're stepping down here. They're not letting price reclaim the breakdown area. And then another one is you'll see before the breakdown, sellers show up here. And what you typically get here is some sort of small wedge. I like to call them 50 EMA wedges, and it's my other entry model. And it's my directional entry model. So where I look to take a directional breakout or breakdown higher, lower, right? And this allows me to participate in a breakdown here while keeping my risk tight and having my stop be something like this, right? Oh. Let me do that again. So my risk will be something like this, and I'll be looking for something like this, right? I'll be looking for these lower target zones, but I still want to pay myself and finance my risk and take some off, right, at my designed area, assigned area. Minimum 5 minutes as far as time span is not acceptance to me. That's just one candle. We need to see a lengthy period of time, because what time will allow you to do is allow you to get more information or data, because we're data analysts, right? If you think about it, we're analyzing data and then executing based on that data. So we need to wait for enough data to confirm a structure that we have back tested or researched over time to show us there's a high probability edge in a breakdown, right? For some, it's order flow. For some, it's a bearish fair value gap if we bounce them to it and then reject from there. For some, it's break of structure. For some, it's, for me, it's a wedge, because I've defined that really well, where I know what now needs to happen to get followed through or not. So the wedge structure here will be the breakdown of that, will lead to the breakdown, right? So you need data for that to happen. You need time for that to happen. And now I just wait for this trade to take place and just sit. No need to overtrade. If I can do this consistently, you can imagine that most of the time I'll lose 1 R if I lose a trade, right? Then the other parts of that would be I have a profitable trade. I finance my risk at 1.6 to 2 R. And After that, it can stop me out at break even. But guess what? I locked in 1.6R minimum on half of the trade. So if I only on half of that size, I make 1.6R, and on the other half, it's break even, then I made a little under 1R total net for the overall trade, right? If I don't move my stop to break even, then half R will be a loss, and then half of the trade would be 1.6R. You can do the math there and see, hey, that's still a profitable trade. So even though my plan of seeing a big reversal push higher, like we are seeing now, in a scenario where there was no follow through, and I did take half off at 1.6R, well, the other rest of that can stop me out at a complete 1R loss on half of that trade. But guess what? Even though the idea didn't really pan out, I was still profitable in that trade. I did not enter ES or MES. I do enter both when I feel aggressive. And I did have a good idea of this reversal, but I don't want to show off that aggressive side yet a bit here. Right? I want to be more disciplined and make sure risk management is the focus here. Because essentially, if I have 2 trades on, that's 2% of the account. But it would have been a great day, right? But it is what it is. It's I'm trying to showcase, the parts where I think I excel in: risk management, financing my risk, and structure. Throughout time, you guys will see me increase my risk. What were my trades Monday and Tuesday? 1% has not always been my risk. I used to trade a smaller account and it would be 2 or 3%. I do have a much larger account where I swing trade, and I also swing trade futures, and that will have higher risk. But 1% is consistent with me, because look, if 1R is 1%, and if I can make 20R a month, to me that's a sustainable business, right? And that's what this is for me. If I'm risking $500 or $2,000 or $1,000 per trade, then you can see how fast that is to sort of have a good month, right? 15 grand, 20 grand. A smaller account, greater risk, only because it's a smaller chunk of the pie for my overall trading balance, right? So think of it as 10,000, maybe a small account, but in reality, it can be maybe 10% of the overall portfolio, right? So you can sort of imagine, okay, well, if it's 3% of that $10,000 account, in reality, maybe it's only 1% of the overall portfolio allocation, right? That's how I view it. How do I trade choppy days and Mondays? So similar to what you saw here, how we saw that failed breakdown and push back higher. Let me show on TradingView, just because I can show that exact price action a little bit better. Monday was a trend day. It wasn't choppy for me. Let me see. Let me see if I can show. I don't average down. I try not to. I want to put my full position in. I don't have enough time, Sean, to show the Monday and Tuesday. My time's coming up, and I think Jim or Deli's tuning in a bit. Jim's here. Hey, Jim.
How are you?
Good. How's it going with you?
Pretty good. Great to see you again. I love looking at the screen when I see an entry price, a target we're getting close to, and that stop being moved to break even plus. That is a beautiful thing to me.
Me too. Hey, I agree with that.
Yeah, good work today, man.
Thank you. Thank you. We'll see what happens into the rest of the day, but good trading so far.
Well, I'm gonna have my charts up, rooting for that target to get hit.
Yeah, absolutely. Thanks so much, guys. All right. Thanks, Jim. And you guys take care.
All right, man. Thank you, Christian. Good to see you, man.
Likewise. Bye-bye, guys.
All right, all right. All right, that was pretty awesome. I was introduced to Christian last week, and he's he's the real deal, man. It's these young guys that just they dig into it and they've got it going on. So, and look at the chat going. We love Chris, Patty Lou. We love you too. Thanks for being here for sure. Um, So we're gonna get into in a couple of seconds here. We're gonna get into the hot commodity segment. We have these markets, these commodity markets are truly on the move. I mean, it's spectacular. They're great markets to trade. A lot of the techniques that you're seeing from the stock index futures guys are very applicable to some of these commodity markets. So we're going to get into that right now. I'm going to get look at it. Anthony's like, that was awesome, Chris, for sure. We have Tracy Shuchart, Shy Girl, here with us. Tracy, how are you?
Jim, you don't know my last name by now? Shuchart.
I say it wrong every single time, and after I say it, I'm like, oh my goodness, I muffed it again. And I was hoping we could glance over it this time, but thanks for calling me out.
No problem. Anyway, just poking fun. It's all good.
I know.
So we got a lot of movers today. Let's go ahead and let's start with crude oil.
All right, let me pull
like
it up.
that. So this morning we had your usual 9 o'clock slam down, right? Which happens often is the case. But, there are a lot of fundamentals still kind of putting a floor under this market. We've got positive economic data from China, stimulus announcements from the country, sanctions from President Trump on Venezuela, and geopolitical tensions that are the mainstay in the Middle East, unfortunately, right now. We also had the Dallas Fed survey come out yesterday. We talked about this a little bit yesterday, but they said most people in the survey thought that they saw 70 to 74 by the end of the year in 2025. Now, the median was 68, but most responded with 70 to 74 in the range that they gave. And then if you looked under the special comment section, they roasted Drill Baby Drill and said, that's just not feasible. $50 a barrel just does not work for U.S. shale anymore, and 70 is the new 50. So a couple of days of really strong news kind of holding up this market. What are you seeing here today on the chart?
So, this is a 30-minute candle chart. I'm looking at the May contract. Let's start with the bottom here. So we have a nice kind of area support that kind of starts at 69.32, where we have S1 on the daily pivot corresponding with the 0 DTE high volume level. So there's two areas of interest right there as well, really forming a base, which we wicked through it twice, but didn't last, right? Buyers brought us all the way back up and then some, past the initial balance, almost all the way up to that magical $70 level where we see the 0 DTE call resistance and gamma wall there. Not surprised that that's $70. So we're flirting with that 70 again, Tracy.
So yeah, we'll keep an eye on that and see if we surpass it. I know yesterday in the chat, I did say 70.23 was my target for yesterday, and we hit 70.22. I missed it by a penny. But let's move on to copper. because that has been making big moves and we are seeing a pullback. Now, we did see that move higher on the news that we might see copper tariffs in weeks instead of months, and that caused a big spike. However, that said, I think the market is sort of realizing that at least in the short term, this might be a negative for copper prices because traders face huge losses if their copper cargoes arrive on U.S. shores after tariffs land, and because their profit margins are razor thin. Now, in the medium and the long term, it still looks very bullish, but it's not unexpected that we kind of see a pullback here after this run up. What are your thoughts? What are you seeing in the charts? How far back do you think we see a pullback? What areas are you looking at specifically?
Yeah, so great question. I mean, this is a kind of a classic reversal pattern that we saw from yesterday. Now, whenever I see this, it's like when I say classic, it's even textbook, but it doesn't always pan out that way. This time it did. So we kind of retraced back down past that 5.20 level, and we're almost to that 8 EMA, which is kind of an important level for me. But coincidentally, it's pretty much lined up with the 31.8% retracement from a fib line. Now, the fib line was kind of hard to draw, but what I did was I took the recent low, right, where the trend really started, right. I discarded this little low down here because we had that pullback. So I kind of measured it from there, and magically these two levels are there. So if we survive this, let's see, I'm going to kind of eyeball it at 50.08. 45. I would expect a quicker turnaround back to the upside. If we close below it, though, I'm going to be a little bit worried about some more downside exposure here on copper. And really quickly, just looking at some gamma levels for intraday. We're south of that Jax 1 level at 5.2. Not surprised. That's where it's been for a while. But they're south of the Menthor Q's 1-day min by quite a bit, and S2 didn't hold. So right now, again, and maybe if we get a little retracement from a day trade, I probably wouldn't want to get long until this thing settles out.
Yeah, I agree. And I know that a lot of traders will be watching that $5 mark that we managed to spike above significantly.
Yeah.
I think that is an important level, or we could see more downside. Now, moving on to gold, because gold is also another one that is on the move today, but on the upside. Gold obviously we had a contract roll, so that was the contract roll. So we are now trading June. So we do have a contract gap, but we are still trading higher significantly. I think a lot of this has to do, obviously, with the new tariff announcement that we saw yesterday on automobiles. So that kind of risk is still baked in the cards, and we haven't even gotten to the real tariff announcement yet on April 2nd. We also had Goldman came out this morning, and they said their target is 3,300 by the end of 2025. What's this looking like to you?
So on a daily chart, yeah, we have that rollover gap, and I applied a fib extension, and which is it's a little bit wonkier when you get that gap, but I did it anyway. And we're chewing through some levels here. The 38.2 we've already achieved. The 50% is the next on my target, 31.15, and then 61.8. If we close above that, that's at 31.41. Then this could be a sustained move up as well in gold. But there's plenty of upside targets here on gold if you're bullish, which I am. On an intraday chart, really quickly here, we are up against call resistance. That's at even 3,100 level. I'm not surprised to see it there, but we're kind of bumping up against it right now. We've tapped it twice so far. Maybe third time's the charm. I don't know, but this is looking pretty positive. Jax 1 again is way down here at 30.75. That would be quite a retracement back down. I'm sure that folks who like to trade the retracement are going to be looking for that, like, all right, I want to try to get long again. But that's what's going on in gold, Tracy.
Yeah. Yeah, I mean, I would love to see that contract gap filled, like, and a gap and go back higher. That's personally what I would like to see. But, gold, it's been one of those really tricky ones that just hasn't given a lot of decent pullbacks. They've been pretty shallow. Let's move on to silver, another one that's on the move today.
Right.
Big move up, big move today. So again, bumping up against that almost that 35 level that we've been trying to get over. I still do think that if we manage to get a sustained move over, we could be in for quite the squeeze, as some of these shorts get squeezed out that have shorted at 35. We'll see what happens over that. I am expecting it at some point, even if it doesn't make it this time. I am still expecting it. What are the charts telling you?
Yeah, so this is like, if from a longer term point of view, it's like this is, if you consider that old top in May of 2024, this particular high right here on the 18th, and then today we're just blasting through this, triple top, I'd call it, that we're blasting through. This is a humongous green candle. I know it's not a technical term, humongous, but it's a humongous
Is now.
candle.
I like it.
And I just did a real rough extension again. And, we have some targets here, 35, 28, and then again at 30, well, we'll just round it up to 36 from a longer term bullish point of view. The intraday chart, we've rarely do you get to R3. We got to R3, not surprised with the big green candle here. We're kind of stalling there right now, but no significant retracement just yet. We blew through call resistance at 3,500. We blew through the 1-day max at 34.8. So it's like, all of these levels, I don't even need to read them. All of these levels we just blew through right here. It's looking pretty strong right now, Tracy.
Yeah, I think so too. I would definitely be looking to see if we are able to close above this 35, or if, again, we get shot back down and we close under it. The level to watch, I believe. And then I want to do something different today. Let's look at 6E, because we haven't really talked about FX. And I know I don't want our FX traders to feel left out there. And I think it's really pertinent because it's so heavily weighted in the dollar index, and it's all tied to tariffs right now, as far as the dollar move is concerned. And so I think in the very short term, we could see strengthening of the dollar, but weakening in the medium to long term, which is actually what this administration would like to see, is a weaker dollar. And that helps absorb some of those tariff costs as well. But what are you seeing today in 6E, which is the euro?
Yeah, so I have a daily candle on the screen right now. This is the Euro FX versus the US dollar futures, folks. This is a really interesting. This is a great pattern here. Couple of things going on. We have an anchored VWAP. That's that white line I have arced around there. And we started it at the lows on February 28th, and we literally touched it today, and buyers came in and pushed us back up. This is kind of a classic, what I call anchored VWAP touch. Now, also we have that 21 EMA, which is right around the same level, and then for the third, I don't know, leg of this stool, if it's a three-legged stool, that 38.1% we didn't get to yet. So this was kind of an interesting move up. It's on its way to becoming a kind of a bullish engulfing candle right now, situated right between the 8 EMA and the 21 EMA. So this is a normal looking type of distribution here. And again, I don't know if the low is in or not, but it looks to me like we're moving up again. From a 30-minute candle point of view, we have The Jax one level we didn't get to 1.085. We got close. We have a lot of these wicks up here. So whenever I see all these kind of bigger wicks at the top of the candles on a formation like that, I like to call those Mohawk wicks, right? And the Mohawk wicks to me represent sellers just keeping pushing us down. And R1 is the key level right now. I would really like to see a close of a 30-minute candle above R1 and then contemplate a move up to Jax 1 or even the one-day min is provided to us from Mentor Q. Not a lot on the downside. I mean, the downside's pretty clean. We have pretty good support down here around 1.0806. And that was from 4 o'clock this morning. I mean, this was early. This was even before I got up. This was like 4 o'clock in the morning. So it's looking like a strong day today.
It's like when I get up.
Do you really get up that early?
4:30, yeah. I know. I'm crazy.
Wow.
No, it takes a
Wow.
while to get this all done too before I get here.
Yeah. No, I bet. If I could could I call an audible really fast, Tracy?
Absolutely.
All right. I know we had did we have a nat gas report today?
We did.
Yeah, so it's always this is I don't really I'm not this is my least familiar market, but I noticed and I think that was at 10:30, right?
Correct.
So yeah, so this would be this candle right here, right? And it seemed like we had like a knee-jerk reaction where it rallied up and then came back down, and now it's trying to find some equilibrium. Was there anything in that report that was surprising?
I think we came in less than we had anticipated. Or sorry, in negative territory, which is positive
Okay.
for that gas, if that makes sense. But other than that, I mean, that gas is really, they don't give you a lot; they just give you the number. that's all you get.
Okay.
with them. Unlike the oil report, so nat gas often does react immediately to that number, and then continues in whatever direction it was kind of going in. But
Totally. Yeah.
as always, be careful with Natty.
Yeah. I know. Awesome. Well, Shai, thanks so much for being here with me this awesome segment. Appreciate you. Looking forward to talking to you again tomorrow.
Definitely, I will see you tomorrow morning.
All right. So let's kind of transition right into the midday market segment. We're bringing in Nick. We're gonna both be sharing some charts here. Nick for a tick is
What's
here
going
with
on?
us, Order Flow Lab guys. And we're gonna do a little chit chat about where Nick's from and all that stuff, and then we're gonna get into some charts though and do some analysis today. So appreciate everybody sticking around and being here with us. Nick, how are you?
I am good, Jim. How are you doing this morning?
Pretty good. I feel pretty good. I'm adjusting to the new schedule, right? So
Mhm.
we're broadcasting an hour earlier than we used to. And so I have to push everything up an hour in my pre morning routine. So, and my guess is you have a early morning routine also.
I do. I have a 4-month-old, so my morning routine gets a little wonky almost every day. It just really depends on what's going on, how she's feeling, who's kind of manning the early morning feeds. Can I do some pre-market prep? So it's been quite an adjustment being a full-time trader and having a newborn. So yeah, every day is a little different.
I got it. And just to inform the viewers here, you and your team, the Order Flow Labs guys, you trade the close with us Monday through Thursday. Now I know a lot of the guys and gals in the chat right now, they just don't always come to that end of day, but it's a special session, man, and we really appreciate you guys doing it. Hint, nod to the folks in the chat.
If you missed it, I mean, it's a lot of fun with the crew here during Power Hour. It's time of the day. I feel like a lot of us maybe are smart enough not to trade, because if we are trading during the New York session, hopefully you've gotten your points. during the first few hours of the day, and you're off to touch grass or do better things. But we're still having fun. We're still reading the tape. We're still looking for good trading opportunities and talking through potential setups and opportunities that can come throughout any part of the session. But sometimes they can manifest in power hour. So you get a lot of, different things. Then you can just hang out, feel like you're hanging with some of your trading buddies and just having fun with us towards the close, because we're just having some laughs, having some fun, and trying to articulate some aspect of education for everybody as well.
Yeah, I'm a little older. I've been around the block, and I've seen a lot of trading duos, right? Where two guys would go up, or two gals, or a guy and a girl, whatever the combination would do, would trade or teach or do whatever they do. And I got to say, you and Leo are two of the best together that I've ever seen. It's just great the way that you could talk about not only the markets, what you're seeing, if you're placing trades, if you're not placing trades, doesn't matter. And that whole analysis is when you guys talk to each other is kind of you're teaching everybody else what's going on, and you guys are really good at it.
Well, thank you. Yeah, I think it's a good balance of, first of all, Leo and I know each other. We're good buddies. We're good friends, and that's kind of what I think it can manifest into, in a way where you're able to still articulate kind of what's going on in the markets, but still having fun with it, not taking it too seriously. Because if trading's not fun, I feel like, why are we doing this? If you can't have some laughs, if you can't kind of enjoy sitting here, and even during, I mean, everyone remembers, I think, Monday and Tuesday of this week, how much of a snooze fest it kind of was when we were just consolidating. I feel like near that kind of near term high that we've put in potentially this week, when there's not a lot going on, it's just like, how can we still provide some aspect of value as we're sitting here in front of everybody and trying to find some trading opportunities. So it's been a lot of fun. I've enjoyed the experience, especially during a time of the day that I don't historically trade. And when I have, it may not even be the most positive part of my P&L is going to be during power hour, which is why I guess I'm smart enough, or I've grown enough in my trading to potentially sit out of it sometimes. You don't get that whipsaw. But we've had fun. If you haven't checked out the close, trading with the Order Full Labs team, please check it out. I think Stowe and I don't remember who else is it. No, and not XY. It's Elias, I believe, today. I'm going to hang out and be trading the close with y'all. So I would highly recommend everybody check it out. If you have nothing to do on your Thursday afternoon, it should be a lot of fun to hang with those guys and maybe learn something, maybe see a good trading opportunity. But if not, just a good way to kind of wind down your trading session.
Yeah, and you really do learn stuff. Here, I've been trying to learn how to do this since 1980. All right, I'll throw it out there. And so it's amazing how I learn something new just about every day from Deli, from Shy, from you guys. And that's the great thing about doing this is you're always learning something new. You're always having these aha moments. The paradigm of the market changes all the time. And it's a fantastic experience for me. So I appreciate you guys.
Yeah, and I've always loved learning from other traders, especially if they trade slightly different styles, or maybe they're reading the tape, but it's the same general information that we're all kind of digesting at the same time, but someone's interpretation of it can be completely different. And that's why I think it's always important to, in a weird way, like have a beginner's mindset in this game, because everybody may articulate it just slightly differently, but you may retain it more effectively when someone else says something similar or uses slightly different terminology for how something is setting up, on the tape, that maybe you'll be able to take in a little more from a slightly different perspective than maybe you have in the past. So I enjoy hearing the different styles, the different ways of looking at something the exact same way I am, but someone else's perspective is very different. And it's something you can actually grab from, learn from, and maybe, implement into your trading going forward. So it's been cool to see this and what you guys have done to kind of bring all of these different personalities, styles, and perspectives into these markets day to day. It's really cool.
So you suggested a minute ago that maybe Power Hour is your second favorite segment to trade. What time frames do you like to trade?
So I'm usually a New York Open to New York, or not New York close, New York Open to the kind of the Euro close hour. I just like the speed that occurs during, slightly after the open, during initial balance. It just fits a lot of what I look for as far as setups. We do tend to abide by various MGI levels, and the market just kind of behaves in a normal setting in a way where a lot of that end of the day order flow can be a little wonky at times. You see a lot of repositioning, you see options kind of can move the market at times. So sometimes it's just, I don't love sitting in there towards the end of the day to take trades. I like the speed. The same reason why I am just one of the worst Globex traders probably on YouTube. It's too slow. I tend to oversize. It's just not my time of the, I guess, the evening in a way to execute trades and be successful. So I've matured in knowing where my P&L tends to stay green, and it's kind of that good 2 hours between New York Open and the typical New York Euro close. I think we're still in another week of like that wonky time change where I think Europe is still closing at 11:30 Central Time. So when that goes back to normal, yeah, that's like the 2 hours a day that I like to trade. Plus, like I said, when you do this full time, like I kind of do now, you learn to not only trade when you're the most effective, but also how can you fill those other hours of the day. And yes, I'm screwing around with Leo and my other trading buddies behind the scenes throughout the session, but I'm also running errands. I'm being a dad. I'm touching grass. I'm getting some vitamin D, these other things I feel like when you do this full time that are very, very important. So you're not just sitting here staring at charts 12 hours a day and that's all you do, live and breathe. That's fine. But I like to still have some normalcy in there. I like to be outside. I like to do other things. I like to exercise. So getting out of the office, the little cave that I've kind of built here, is still really important to me day in and day out. So even if I'm sitting in front of my desk, kind of after Euro close, I like to, kind of wrap it up, be done, lock myself out, shut down the platforms, come back towards the end of the session and kind of see what's going on. But for the most part, getting time away from screens, I think, is just as valuable as, putting time in on the charts.
Yeah, and so let's just kind of clarify some terminology for folks that might be new a little bit. You mentioned the Globex session. Explain to us what that is.
So I think that's still like a slang term, an older terminology, whatever. But that would basically be the overnight session, the Asia session, London session. I just have always grown up calling it Globex. So 5 p.m. Central when the market, excuse me, when the futures markets reopen is just kind of what I've always referred to it as. And it's a good time, in my opinion, to dissect the market, not necessarily take a trade. I've done, or on Sundays, I typically would do a weekly prep session that starts on the Sunday open for Globex and, kind of help people kind of plan for their week, figure out some various levels, some spots, some perspective on where we may go as far as like the big four of in futures trading, ES, NQ, GC, and CL, which would usually be the ones I'm helping people kind of do some prep on. So that's typically when I like to organize myself, because like I said, some of my mornings can be completely just thrown up in the air. So for me, sometimes I like to do my next day planning as the overnight session opens, just so we can kind of see how if there was anything going on after hours with earnings or other things that may have moved the market slightly. It's just a good way to kind of have a perspective going into the next session. So yeah, usually use the overnight session to kind of guide my planning for the following or going into the week.
Awesome. So are you able to move the mouse now? Is your arm okay?
I can move the mouse a little bit. So bear with me, guys. If you didn't know, I had shoulder surgery on Thursday. So doing some prep and executing in these markets has been slightly difficult for me, which is also a good reason when things like that happen in life. I take a slight step back from trading. It's been a lighter week for me. I haven't put a ton of capital at risk. I've been doing a few things here and there, but for the most part, I've been using this week to kind of lay low, recover, still be engaged in the market, still having fun with Leo during the close. But yeah, it's a little different. I haven't set up hotkeys, but just trying to move the mouse. It's just been like, I've got the sling on here. So for me, one arm has had difficulty kind of just navigating. So I've pretty much been stuck on my execution chart and then having a longer time frame chart, this 30-minute here, to kind of guide some intraday trades that I have taken this week. But it's been very, very light.
Yeah. So, okay. So now, but we have the charts up. This is great. I want to kind of talk about your setup. You mentioned MGI also a couple minutes ago. So explain some of these these words that you use and how they apply to your chart.
Yeah. So MGI going to be market generated information, which I think if you're a new trader, an old trader, it is still probably one of the most effective, simplistic indicators that you can just throw on a chart, however you want to read it, whether it's actually having something like you see on the right side with volume profile to kind of just visually guide what's going on in the auction, or if you're someone like me that likes to have a lot of this stuff kind of auto plotted for you, that's where the Order Flow Labs team has built some tools that can pretty much automate some of your weekly prep, your daily prep, to make it super simple to figure out, where are we, where we may go, and where are areas that you may want to interact with. So as far as planning on where I may execute in the future, on a shorter time frame chart, I like to use anywhere between a 30-minute and a 4-hour to kind of guide that. And I will plot various levels. For me, usually it's the weekly MGI. So things like the previous week's low, the week open, the previous week's value area high, value area low. And then on my shorter time frame charts, things like the previous session's value area high, value area low, just to help me understand, are we trading in balance? Are we trading inside of value area? Are we trading close to a point of control? Things that can keep me out of spots where I may get chopped up, or we may reverse and head back towards a higher area of volume. Things like that, I think are easy ways, even if you don't like to use a lot of indicators, just good ideas to have a perspective on, kind of where we're trading, and does it make sense potentially to find an entry in the spot, or am I just in the middle of a short time frame value area where it's a literal coin flip and we could go either direction, and it makes sense for me to get chopped up, stopped out on a short time frame trade because the market's at a decision point.
Yeah. So, okay. So when you use words like value area, we're talking about the volume profile. I can see the histogram bar on your screen right now.
Correct.
Those histogram bars move in real time, right? As trades happen, they get bigger. And that's a very important thing that you guys look at, right?
100%. It's one of the, I would say, early concepts that I started to use in my trading, of just a way to understand the auction in a simplistic way. Where are the most buyers and sellers? Where are there very few transactions really taking place on the tape? And it's something that I like to use, like I said, to kind of guide, not necessarily a bias by any means, but help me find potential high probability entries, because we know most of the time the market's trading in balance. So you would see me take a lot of trades, or maybe it's, for some people, it might look like I'm fading momentum, but no, I may be looking for a reversal to happen at something like a value area low versus a value area high, kind of like what we saw this morning, where we filled the gap from the Sunday open. NQ had a very violent flush of last week's value area low. But then once, in theory, we came back above last week's value area high, previous week's value area high, once we came back above that and we filled the gap, you could feel pretty confident, if you were seeing buyers on the tape, to potentially just join along with them for that rotation back up towards any of these other MGI levels that kind of make sense, where we may rotate back into value for the moment from this week's tape. So something like that is a setup that I would typically take a lot of the time. And I think it's something that Leo and I were talking about yesterday at the close, where we were kind of teetering around the Sunday open, and we were talking about this exact type of move where you could see that flush towards us potentially filling the Sunday gap. And then the market would probably make a decision. Are we going to fall back into the last few weeks of value here? All of these candles that are sitting a little bit lower inside of 20,000. But it seems like for the moment, the market has made a decision that we are going to find higher prices based, and potentially be breaking out of this old range from the last few weeks. So I would take that relatively seriously, at least in the shorter term, that we filled it. We're now building volume back above the Sunday open. So maybe I'd be looking for more dips to buy on this tape today, rather than, trying to short this down for a new low down towards, 19,000s.
Yeah, that makes sense. And so for your volume profile that I'm looking at right now, how far are you looking back?
So I believe this one on this chart is, actually, I guess this is my 1 hour. So Yeah, this is probably, I think this is just the balance area, or actually, I mean, this may be visible range. I don't remember exactly how Leo had this one set up here.
Okay.
So I believe it's majority of the balance area, and then it looks like even what we've kind of done this week. This might be a 1 week rolling or 2 week rolling here. I can't.
Okay.
I gotta
Yeah.
double check.
Yeah. So, right. So, but you're not going back to like the beginning of the month or the beginning of the year.
No, it's not usually what I would use. As far as like my executing for day trades and things like that, I usually am using possibly two. On my longer time frame charts, like 4 hour, I will usually use a visible range. So whatever I want to
Okay.
kind of adjust to based on what I'm looking at. So what candles are on the screen is a lot of the time what I'd like to populate a volume profile for. And then my execution is usually going to be a daily. And then I may, because I have like the previous week's value area high, value area low, a lot of the time that's more important to me to execute on than having the histogram kind of constantly update based on certain time frames. I like to execute based on those previous week ones, and then what I'm seeing kind of more in real time, like today or the previous session.
Got it. And I'm not looking at I'm not seeing moving averages, or maybe there's a couple lines there that are really subtle that I can't see, but
Nope.
that, yeah, walk us through the order of importance
Yeah.
of the technicals on your chart.
So for me on execution, I mean, I have a few different charts that I look at, but for the most part, I like to keep things very clean, and volume is very important to me more than anything else, I would say. So the different types of view ops that you can throw on there, I typically on my execution chart will use actually, I can jump to my execution too, so we can see that. So I'll use um, like an RTH VWAP and like the 24-hour VWAP that'll just basically continue once we reopen at 5 o'clock Central for the overnight session, and then an RTH one that I usually use. And then what's cool about Leo's and Orpho Labs is kind of anchored leg to leg profiles is the VWAP can adjust based on kind of those swing highs, swing lows that we may get intraday during the session. So a lot of the time I'm looking to have one anchored maybe from this like swing high that we had up here towards 20,200. So that may be kind of trailing here. So if I was joining along with this short potentially from the today's high, it would just keep me honest as far as continuing to kind of follow that trend. So VWAP I probably use more than any, but then on like a more time-based chart, I like to throw on a 21 EMA on my 5 minute. Just another one that just, it's more so less to give me trade entries and more to keep me honest, or am I following trend on whatever time frame I'm looking at? So for me, a 21 EMA on a 5 minute is a good day trade interpretation of kind of the trend. Am I fading in theory the momentum during a specific part of that move? Is something that I like to use, like I said, not necessarily to enter off of, but I've found it can be the 21 at least on a 5 minute can be a good way if you're somebody that likes to trail your stop in profit, a good way to kind of keep it under so that if we break in theory that 21 EMA on that shorter time frame, we may be just like you're seeing with kind of how the leg to leg on this delta profile here can shift. You may be seeing a change in the short-term trend that we're in on that shorter time frame. So I use it typically to kind of trail stops, but for the most part, I use a lot of VWAPs. You won't see a ton of EMAs or simple moving averages on my chart. On my long time frame charts, like my 4 hour, I will use the 50, the 100, the 200 day. I think a lot of people use just to kind of guide that longer time frame momentum as well.
Yeah, no, it's funny. When I like to on a daily, I like to use the eight EMA and the 21 EMA, and they're both fib numbers, right?
Mhm.
It's like, all right, why 21? Well, it's a fib number. I like it.
It's the same thing. Like I feel like a lot of people have slightly different flavors of the same concept, but they're used for, very similar things. So yeah, it was one of those where as I was learning, it just 21 was a number that some mentors used, some other people that I was trading with had success, at least just identifying a directional potential bias on that shorter time frame. So
Yep.
it's one of those I continue to use, and until in theory it doesn't work anymore. It's just something visually I like to have on some charts.
Yeah. All right. So tell us a little bit about the delta.
So the delta by price here.
Yeah.
So basically what this is obviously telling you is going to be during this like swing high or swing low. So in this case, this swing high from up here, this leg to leg that's kind of building, it's giving you that delta by price for this I guess rotation back down here towards the this anchored VWAP that I actually had from the swing low. So it's telling you that delta in, you know, the buying and selling that's taking place basically on the tape here. So a lot of the time I like to use it to identify, you know, ways on the tape where, I mean, for me, it really comes down to, I guess, how do I say this? Am I continuing to see that momentum continue to drive and build in this way of trend? So for me, I use it, I guess, more on the full session at times as well. So I like to see that full delta histogram of kind of like you would see on the right with the whole session's volume profile. I like to use it more on the kind of entire chain. And specifically, Leo likes to use it a lot on NQ. For me, I like to look at it a little more on ES to kind of guide potentially an entry or a larger time frame reoffer for the session, just because the leg to leg just continues to build on the shorter time frame. But sometimes when I'm looking, I mean, you guys know this, I typically lately with higher volatility, I'm trading ES a little more. So for me, I like to use some of those large buyers. I mean, we've seen it recently where you're seeing those like 1,000 lots hit the tape. So for me, I like to see that continue to build throughout the session at various spots too, to kind of guide, you know, where like an iceberg order may be hitting the tape, or just a larger or a longer time frame buyer or seller continuing to step into this market.
Makes total sense. By the way, I'm like you. I freak out on the micro Nasdaq. I can't trade the micro Nasdaq. It's the ES is my go-to. I mean, you know, you have 60 handle candles up and down routinely, and I freak out. I can't handle it. So we'll stick with the even the S&P for me.
Yeah, it's funny during time of higher volatility. It's just I lean towards it. It just respects certain levels a little more. I don't know. I trade both. There's days I say that and then I'm still like in a 3-lot mini NQ trade. So it just really depends. But sometimes, yeah, I think it just depends on the time of the day, it depends on how I'm feeling. I lean towards wanting to trade ES, but I know NQ's the hot kid on the block that everyone likes to trade off of, or, you know, build good positions in. It's just not always my favorite instrument to trade.
Yeah, I got it. Have you journeyed into other commodity? You mentioned crude oil earlier.
Yep, I will every once in a while. It's the same thing. It's a mood thing, but yeah, I have dabbled in trading some crude here and there. I trade gold every once in a while. It's funny. I was in a gold trade shortly before the birth of my child in November, and I was long gold 2550s. And I was kind of thinking of it as a trade I wanted to hold, but then life happens and I have to focus on the birth of my child. So I flattened for a decent profit, and that marked the near-term bottom of gold. So for me right now, gold and I have a love-hate relationship because I just have not been able to take a trade basically ever since then. But every once in a while, I do dabble in some of the other commodities. For example, I did actually win a contest to trade lean hogs, and won a cowboy hat from trading from it. So I think there is value in learning, or at least watching some of the other instruments that are out there, especially because you'll have days where a lot of us being equity traders, there's a better market to potentially be in because something like ES is consolidating maybe a 10 to 20 point range. But for the most part, gold could be moving. Crude could be very much in a trending daily in the session at the very least. So there's better markets to do there. So one of my goals for this year is to try to not necessarily focus on other instruments, other products, but watch them more and be willing to, in theory, basing it by the same, I would say, things that I look for, execute based on, seeing if there's an opportunity in another market when things are consolidating, or we're in the summer doldrums, with equities and nothing's really happening. You may catch one or two good moves throughout the session, but then the market just kind of dies. So that's something I want to focus on. But yeah, I have dabbled in the lean hogs. I screwed around with cattle for like a week. So there's other opportunities. I wouldn't say I'm a trader by any means, but sometimes it's fun just to throw on something you don't necessarily know a ton about and just see, are you really a trader? Can you look at a blank chart, in theory, something that you don't watch every day, and just be executing by what you're seeing in real time? So I think there's value there, and kind of getting out of your comfort zone. And that's why the micro products can be great too, even if you're throwing on, one micro crude. If you've never traded crude oil, there's just that opportunity to get some exposure, play around with it, and just see how it moves, and see if you like it too.
Yeah, that's why the micros are great for sure. You could experiment. Going back to this chart though. So right now we're entering, the European sessions. Well, because of the time difference, maybe not. About to end, I think. What would you, for getting ready for your next trading segment, whether it's power hour or not? What do you get? What's your takeaway from this chart right now? I mean, would you analyze this like right now, saying, okay, I'm mentally prepared for later on after lunch. I'm going to get back involved here, and here's what I'm hoping to see based on the pattern that we see so far and based on the volume profile?
Yeah. So us coming down here towards the opening range, from early parts of the session, as well as the point of control from today, I would be looking to see, do buyers basically defend the previous day low? Can we bounce in NQ anywhere here in this 70 area down towards kind of the 40s? Do we see buyers continuing to step in? And right now, based on the delta flip that just fired and some of this positive delta we're seeing here, it looks like they're trying at the very least to defend this spot for that continuation, maybe back up towards the initial balance high. So that's one way to look at it. The other way you could see this is we had that decent move back up, but now we're failing inside the initial balance inside of the previous day close. So is this a kind of failed breakout to kind of defend the downside that we saw yesterday? And now are we going to rotate all the way back down towards initial balance low? So I would say, looking at this, where we're trading right now, there is potentially an opportunity to long this somewhere in the next 30 points on NQ. Would I necessarily take it? No, because to me, this kind of looks like we did just fail. We went up towards last week's high. You couldn't really find buyers up there, and now we're falling back into most of or at least the latter half of the overnight sessions range and into the early parts of today's opening range. So I would kind of look at this like it's a 50-50 type spot for me. I would probably be hands off, just kind of waiting to see what happens next. Just because I'm a little worried, are we going to get more continuation and maybe go, retest that gap fill, that week open from Sunday as well?
Yeah. Okay. So that's on your radar screen. The pending gap is still on your radar screen.
It is, just because, like I said, us failing at last week's high, and now falling back in the range just makes me think, are we going to, what was the early part of this week, just we really couldn't find any new buyers? And in fact, on the longer time frame, did we find those larger sellers step in towards yesterday and are now just, we're waiting for a good opportunity to reoffer a bit higher? I mean, I think, did we retrace roughly almost half back, I think, on the NASDAQ from that high a couple weeks ago? And then now with the tariffs and everything next week on deck, I think we have PCE tomorrow. You just have, I guess, not reasons to potentially find some lower prices, but nothing that makes me want to jump in and long prior to those just yet. So, but totally. That's on a longer time frame. On the day trade perspective, let's see what happens here at the previous day low.
Totally makes sense. All right, man. Well, listen, I appreciate you kind of sharing a little bit of the secret sauce with us and being with me. I know this isn't your regularly scheduled time frame. You're Mondays, Wednesdays, right, for trading the close?
Mondays and Wednesdays with Leo, the Tiger, and myself. Trying to have some fun at the close. Please tune in this afternoon. Some of the other guys on the Order Flow Labs team will be back. I think Stowe is even going to trade the Dow today. So if you're looking for something a little different and you've never traded it, I don't know if he's going to. I'm going to put him on the spot and hope that he does trade the Dow, because he's one of the few Dow traders that I know. And I know he's got a good chart book using Order Flow Labs that he's created for our lovely Dow index. So maybe have some fun with them. See if he can find some decent Dow trades. The YM is down about 0.25%. So I don't watch it too much. Jim, do you?
Yeah, I do. The Dow, I mean, there's 30 stocks in the basket, right? So, a couple of those having trouble could kind of create what I would call unsystematic price moves. So the correlation is going to be a little different than the S&P. And sometimes, and so it's like, all right, if I'm going to focus on this, I got to focus on this. I can't just be casually toggling back and forth looking at chart setups, because some of the underlying equities really matter here, right? I know everyone talks about the big seven, but with the Dow, there's only 30 that make up this index. And it's a price weighted index, so you got to look at the top ones. So it's a little bit of a different focus for me.
Understood. Yeah, it's never pulled me into wanting to take a YM trade. I've never even, I can't even say I've dabbled. I've looked at it, but not my first, second, or third choice, I guess, to trade.
Yeah. All right. Well, listen, I'm going to pull up some gamma charts. I'm going to do the last 10 minutes of just kind of wrapping up what we've seen this morning. Feel free to stay if you got something better to do. I appreciate you being here with us for sure today. It's going above and beyond the cause of duty with me.
I appreciate it, Jim. It's good to hang out. Good to come on the show at a slightly earlier time, something I'm more used to. So it's good to be here, man. I appreciate it.
All right, man. Sounds good. So we'll pull up some charts here. All right. Thanks, Mission Control, for that. I wanted to kind of talk a little bit about the E-mini S&P. I know we talk about it a lot, but I'll go over some other markets as well. And so we have some interesting data from Mentor Q with the gamma levels. And I just kind of wanted to talk it through a little bit. I apologize for all these lines going through my screen, but they're all kind of important. And when I look at this, is just a 30-minute candle, right? And the and the right-hand side, I have some text here, right? And so what I'm trying to compare is today's expiration on the options versus tomorrow's expiration. And I pulled this data right off of Mentor Q's website. It's pretty awesome. So just a couple of categories here. Positive gamma. So today the positive gamma is at 5,800. Right now we're trading, pretty far away from that. But tomorrow's positive gamma bumps up to 5,850. So there's a 50 handle separation there. Negative gamma 5,725. And for tomorrow's expiration, it's 5,750. Remember, tomorrow's Friday's expiration. Today's just 0 DTE. So I know it's just tomorrow, but it's a subtle difference there. It is the weeklies. And then the next level is the high vol levels, right? We have a high vol level of 5,770 versus 5,750 for tomorrow. Call resistance bumps up 50 handles as well from today to tomorrow, from 5,800 to 5,850. Then put support 5,725 to 5,750. So yeah, I could look at every given day. These levels on my chart change, right? We have the different jacks levels, the different high vol levels, the different resistance levels. But now that I could see a couple days in a row, not only that, on the Mentor Q's website, you can see more expirations, right? You can see more expirations and kind of do the analysis and think about your bias, right? Well, maybe today my bias is a little bearish, and tomorrow my bias might be more bullish, right? Just looking at the spread separation between the two gamma levels. So that's kind of takeaway number one. Takeaway number two today. We've had a 57, almost 58 handle or 58 point range today. and let me double check to make sure I'm not missing some weird wick. No, I'm not. So it's a pretty it's a and I hate to say this out loud because in the old days this wasn't the case, but it's a baby move. It's a baby's it's small, right? The ATR is still almost 100. It's at 96. Now this was 103 on Monday, so it's coming down because we're in this weird kind of consolidation range here, and it really, in my mind, I just feel like this is we're going to be consolidating unless something special happens at PCE tomorrow, which is a more kind of contemporary measure of personal consumption because it looks back 1 month versus that GDP revision that we saw that looks back, to yesteryear. Short of something spectacular happening there, really, I think this all eyes are on April 2nd tariff release, right? So, or new policy. I guess we'll call it new policies on tariffs. But in any event, that's kind of how I'm feeling about this tight consolidation on some of these stock index futures. But anyway, 57 versus 96 is about 2/3. So, one thing when I see that kind of dynamic between the daily range and the potential, then I'm thinking, okay, if we have a breakout, let's say we break out above the pivot, right? The pivot was pretty good resistance today. We tapped it almost perfectly twice, and then we broke back down. This is just a daily pivot, nothing special about that. But let's just hypothetically say, well, we have a candle of a body close above there, and we have some momentum to the upside. Well, now I'm thinking, all right, we got easily another 30 handles to get to the ATR is potential, right? And if you think about what 30 handles is from where we are, it's all the way up to that call resistance level. Again, this is a 0 DTA gamma wall, but it's still pretty important, especially combined with the blind spot 3 as a potential destination, right? And you can do the same math at the bottom, right? What's the potential destination? It might not get there. Remember, ATR is just the average, right? So it might not get there, but it gives you a little bit more of it kind of takes out of my mind like, oh, it can't go any higher. Well, yeah, it can go higher. Or it can't go any lower. Yeah, it could go lower. On the downside, though, we have a really big rejection candle here. I mean, this buyer, we tapped that S1. This is why pivots are so important. We tapped that S1, tagged it, and buyers just said, nope, pushed us back up forcefully. I'll use the word forcefully. Back into the value area that Nick was pointing out. I just have my value area is simple. I'm tracking this the full session, right, from the Globex open last night. We'll stick with the terminology all the way till today. This is the volume profile for all the transactions that have happened so far. And we're kind of right, we're in the value area, right? We're pretty close to that point of control, which is that biggest histogram bar in the middle right there. And we're right next to that JAX 1. And these JAX 1s, when there's no news and there's no frantic price action, a lot of times they're self-fulfilling prophecies. Not always, but a lot of times. So we are tagging it right there on the E-mini S&P. Volume profile itself has this volume node up here, which I have on my radar screen, but that's out of value. That's prices above value. And coincidentally, the high vol level is right at the break between the top of the value area and prices above value area. So that, in my mind, is also going to become a somewhat less subtle area of resistance should we get up there. And one thing I forgot to point out, March 31st expiration is the one with the highest, obviously, because it's a monthly, the one with the highest gamma exposure levels. So that's kind of the story of the E-mini S&P. It's great to see some old faces in here as well. Appreciate you guys popping into the chat. Kaz is here. Good to see Kaz, one of our regulars back in the day. Good to see you, buddy. Todd Musser's here as well. You could blame Todd. You could blame me for whatever you want. It happens. Mrs. Kaggs does. Oh my God. Job says loving the shows. Awesome, man. Appreciate you guys being here for sure. Just kind of glancing on across the quote board, mostly red on the stock index futures. Not huge red, but a little red. Currency pairs are a little bit mixed today. British pound sterling, Swissy, Euro are both up. Canadian dollar is down a little bit versus the US dollar. The Aussie's up a tad. And the yen, poor Mr. Yen is down, down again as well. Micro Bitcoin is still, I don't want to use the word sluggish. I want to use the word range bound, just like everything else. We're still in that March contract there. I'll just tap it really quickly here. I'm starting to really like this market. And just to kind of check out price action for today in this so far, does this remind you of that E-mini S&P target wick that just boom shot down and buyers rejected the effort? This is looking pretty identical to that. And we went all the way down to previous sessions lows. That's that dotted red line I have on here. I love looking at previous sessions lows. So that was support. S1 was support. JAX1 was support. And now we're kind of trading a little bit further north between JAX2 and JAX3. And this put support level is a pretty good level. And remember, with the micro Bitcoin, sometimes you don't always get that tap to the area of interest. You get a little bit extra. And I think we saw that at least early in the morning. What is this, 11:30 area, where we kind of had a body of a candle close a little bit above JAX2, not a lot. But again, this is a pretty tight range as well. This is, again, in the same camp as it's anticipatory, waiting for something to come to life. Oh, what a great morning, man. What a great morning. We had Pharm, which was awesome. That was good. We got Tanya today. Christian, I mean, I love all these young people that are awesome, for sure. And Nick for a tick. So I want to thank all those guys for being with us today as well. We're gonna come back at 2:30. We're going to finish strong with the Order Flow Labs guys trading the close. These are great sessions in the afternoon. I know a lot of people are like, oh, I'm not trading in the afternoon. I'm blowing it off. I'm telling you, it's worth a look. So if you guys are around, pop in 2:30. Appreciate you smashing that like button. And the other thing is, hey, this is, this whole channel, this whole production, it's free. Tell your friends, your family, your neighbors, your countrymen, people you just run into at the grocery store. We'd love to have them in here. The more folks, the better. Appreciate everybody being cool in the chat. Having said all that, folks, we are taking a break. Be back at 2:30. See you then.